Morning. Good morning, everybody. Welcome back to the video. I am your CA Veeraj. We'll continue with the continuing chapter 4, share capital and debenture. So, if you just recall what we discussed in the last class, anyway, we are doing the revision. I am just doing the revision for revision, not in terms of content, but just to make sure that what we covered. In the first chapter, we were discussing about the introductory part, some definitions, and in the second part, how do we get the company into existence by way of incorporation? What are the primary documents and main documents that has to be filed with ROC for the purpose of getting us incorporated? Once that happens, what should be the content of those documents? All those things we discussed in chapter number 2. After that, whenever the company want to raise the money, what is the document that they have to issue and what are the types of documents? We call it as prospectus, and the types of prospectus, again some other related content has been discussed. Now in the chapter 4 we are going to discuss, I agree that we will issue the prospectus for what? Mainly for the purpose of shares. So what is the shares and what is the capital and what is the debentures? All those things we are going to discuss in this chapter. Once this happens, then again in the next chapter we will again go for one more concept called as deposit. Before that, first we will cover chapter 4, that is share capital and debentures. First of all, we should understand what is share. Share is a Simha, right? Share is MJ. Cat. You only agree that you are not share. Huh? At least if he tells that sir is not share, that's okay. You agree that yourself you are not share. Share means, you didn't listen. Then why did you come to the class? I was testing whether you are listening or not. You are thinking about what? Did I tell anything? I was okay with that the moment you tell you're recalling. Then again you tell nothing. So share means a share in the share capital of a company and it includes a stock also. So it is a share. Share means a share. Share means it is a portion in the share capital of the company. Whenever I tell that 100 shares of 10 each, 1000, this 1000 is called a share capital. Out of this, a single share, that means share means there are 100 parts in this 100 shares. A single part is called as a share. A share in the share capital of a company and it includes a stock. Sir, what is a stock? Stock means it is where we converted multiple shares into a single commodity, not commodity exactly, single instrument, that is called as stock. It is a combination of shares put together, we call it a stock. And the stock cannot be issued by the company. Stock can be created by way of issue of shares and converting that into the stock. So stock is a secondary category type of instrument where only fully paid up shares can be converted into stock and vice versa. Company can never issue the stock. One more MCQ point that can be tested in the examination is the shares can't be in fraction. It can't be in a fraction, but stock can be in fraction. It is allowed. When I say 10 shares equal to 1 stock, 10 shares equal to 1 stock. Now, if I tell that 0.5 stock is equal to 5 shares, even then 0.5 stock is getting 5 shares. Even if I tell that 2 shares equal to 1 stock, because I tell that it is a combination of shares. When I say combination of shares, at least it should be more than 1. So that means even if you take 0.5 stock also, it is 1 share. That means a stock can be in fraction, but shares can't be in a fraction. That is not allowed at all in Companies Act. So a stock is a collection of fully paid up shares that stated in lump sum means put together. A limited company with share capital can convert fully paid up shares into stock. Only fully paid up shares can be converted into stock. And if you look at the thing, it is a company limited by shares. Sir, if it is a company limited by guarantee, that is not possible. When you don't have the shares only, how can you convert that into the stock? Then comes when I say shares. Shares are of two types. Share capital. One is of equity share capital. Second one is a preference share capital. Sir, what is the difference between equity share capital and preference share capital? Both are same shares only, but preference shares are, as the name only says that some shares have some preferences over the other shares. Sir, what preferences? If any share has two preferences with respect to the other shares, then they are called as preference shares. So if some shares does not have any preferences, they might get entire rights also. I don't agree at a later point of time. But when the shares are being issued, if they don't get any preference as to that, then we call it as equity share capital. We even call it as ordinary share capital. Ordinary share capital. Sir, what are the preferences that has to be there? Preference share capital carrying preferential right. That means the party who is getting the shares has some right with respect compared to the like more right compared to the other party. That preferential right. Sir, what right? See, the main purpose of investing in the share capital is mainly two things. One is for the purpose of voting. Second one is for the purpose of dividend. Now there is one more purpose. If the company is not able to perform at a longer period of time, if the company goes for a liquidation or winding up, then at least I should get my money back. That is what for some people tell. So based on that concept only, they derived two rights. Whenever company wanted to give the dividend payment at an agreed percentage. What is the agreed percentage? The percentage which is agreed at the time of issue of the shares. At the same percentage only, 5, 10, 15. If you look at the shares in the balance sheet, they'll tell that 5% preference share capital, 10% preference share capital. Agreed percentage only you give it, but that should be given preference. That means, see, I'm not telling you to don't pay the dividend to the equity shareholders, but before paying the dividend to equity shareholders, first pay my dividend. That is what my preference should be. And second preference is repayment of capital at an agreed premium at a time of liquidation. Maybe premium, may not be premium, at least at par. What is this repayment of capital? When the company is not able to run by itself and they decided that let's close everything and do other things, then whenever you are repaying, first they'll pay outside debts again, inside debts again, bank loan, everything that is being paid. Later that if there is any capital left, first preference will be given for preference, then last preference will be given for equity capital. See, I am not telling make me as a first preference. I am just comparing myself with equity shareholders. So if somebody is getting, see, I am working now, for example, whenever I am going for a negotiation or something, I don't compare how much Mukesh Ambani is earning. Mukesh Ambani might be earning some crores of rupees. I just see that how a peer teacher is earning, how much. So based on that, I start negotiation. The similar way also, here preference shares are not comparing to the entire capital or debts or entire company. They are just comparing themselves to the equity share capital. So prepayment of capital at an agreed premium before the liquidation. So it is, this is paid before making payment to equity share capital. Repayment of capital also, dividend payment also is paid before repayment of capital to equity shareholders. Here one assumption we always make. See, there is a difference between assumption and presumption. I think I discussed in the class. What is assumption? What is presumption? If I tell that MJ is taking somebody on a bike, some girl on a bike, then it is called as what? Assumption, because we were just dreaming. Without any evidence, we do it. But somebody takes a picture and gets an evidence. Based on that, we start talking, then we call it as presumption. Based on some evidence or some facts we speak, then we call it as presumption. Other cases, we just assumption, we do it. That is why the courts are always making the presumptions but not the assumptions, because courts always runs on the facts. Preference share capital is presumed to be non-participatory and cumulative unless AOA specifies otherwise. That means cumulative means what? That if you don't pay dividend in the current year, in the next year you pay both 2 years dividend. If you don't pay for 10 years, in the 11th year you pay all the 11-year dividend. That is cumulative. What is non-participative? Non-participatory means they don't participate in the remaining surplus of the company, not for the voting right. So participation in the remaining, for example, company had some 100 crores of profit, 20 crore paid for the preference shares, 30 crore paid for the equity shares. Remaining 50 crores are there. The preference shares, if they take part in that remaining 50 crores also, we call it as participatory preference shares. If they don't take part in that 50 crores of remaining surplus, then it is called as non-participatory preference shares. Then when I say equity share capital can be of two different categories. Either you issue equity share capital with ordinary rights with differential voting rights, or we call it as UVR, DVR. Sir, what is this UVR and DVR? Equity shares having uniform voting rights and equity shares having differential voting rights. Sir, what is this uniform voting rights? See, I am not telling one share equal to one vote. I'm just trying to tell that if my one share, if other parties one share is having 10 votes, my one share also should have 10 votes. Uniformity I want. If he has 20 votes, let me have 20 votes. If he has 0.5 votes, let me have 0.5 votes. It is same for everybody. That is what we call it as uniformity. Generally, every company has one share equal to one vote only. So uniform voting rate means everybody treated equally. Uniform with respect to the voting rights, uniform with respect to the payment of dividend. Both the things say uniform only. The name says the differential voting rights. The voting rights are differentiated. Every share holder is main purpose is two things. One is dividend, second one is voting power. So either you get more votes, less dividend, or less votes, more dividend. Whenever somebody getting 10% dividend, you sacrifice and tell that I don't want more dividend. Pay me, if you are paying 10% dividend for somebody, pay 50% of that. That is 5% for me. But if you are giving one vote for him, give it two votes. So it is not decided every year. It is decided at the time of issue of shares only. If you know the company, not Indian company, I don't know which Indian company it is, but I'm talking about the foreign company. I think Google, maybe Google. Larry Page is Google, right? Founder. Now Sundar Pichai is the CEO. Even the Larry Page is not what is this actively involved in that. Even if he is holding less share capital only. But even if you want, he can remove entire board of directors and he can appoint somebody else because he is having a DVR shares. His one share is having 10 votes. Every share having only one vote with respect to that, but the Larry Page, the founder of Google, is having one share equal to 10 votes, 10 times more powerful than anybody. And if you look at any company's act, they tell that 51% of the total voting power, 51% of the 50% of the total voting power, that is mainly decided on voting power, not on the number of shares held. That is why voting power having so much of importance nowadays. So differential voting rights. But here, a company, whenever they want to issue that DVR shares, there are some conditions. And in India, I think some 7 companies are there with respect to DVR shares. Only 7 companies, if I'm not wrong. Maybe less than 10, if I'll put it this way, less than 10. What is that conditions? This is very normal conditions. AOA must give authorization to issue of the DVR shares. And if you are an unlisted company, OR should pass at the general meeting. If you are a listed company, OR should pass via postal ballot. See, one thing we already discussed with respect to the postal ballot. Which one? Alteration of, not exactly alteration of object, variation of terms of object. Whenever you want to use the money for some other purpose rather than using it for the purpose which is raised, then you should pass by postal ballot. Actually, we have, I think, section that voting by postal ballot. There are some list of items that is being specified by central government that has to be compulsorily going through the postal ballot only. We will discuss in chapter 7. And if you are voting power of DVR shares must not exceed 74% of the total voting power at any point of time. At any point of time, I'll call it as post issue. Sir, what do you mean by this post issue? 74% means consider there are already UVR shares, normal shares, some 100 shares are there. Then DVR they wanted to issue some 200 shares. Now, what is the total shares after the issue of DVR? 300. How many shares are there? DVR 200 out of 300. So, how much it is? 66.67%. Yes, you can go ahead and issue 200 shares. After the issue of the total DVR shares, out of the total capital, this DVR should not be more than 74%. For example, there are already 100 shares, you want to issue 300 shares. Now, what is the total? 400. What are the DVR shares? 300 divided by 400. How much it is? 75%. That is not possible to issue because it is exceeding 74%. Sir, I want to issue 250. Sorry, okay, 280. 100 plus 280. So 280 divided by 380. How much it is? Can you do it? I'll do it. 280 by 380 percentage. So that means 73.68 percentage. 73.68 percentage. Yes, you can go ahead and issue 280 shares of DVR when there are only 100 uniform voting rate shares. Sir, can't I increase more than 280 shares? Yes, there is a possibility. First increase the UVR shares, then your base will increase. When the base increases, then you can increase the DVR shares. That means if when I say 74 percentage, if I put it this way, if you want to increase 3 shares of DVR, you just increase 1 share of UVR. Because anyway 75% of the capital you are keeping that way. So consider I have 0, 0. I will issue one share of UER. Can I issue 2 point something of DVR? That is possible, because if I take 3, that is not possible, because 75% will come. Consider I will take 2 shares, 2 plus 6 don't write 8 alla. Consider I want to issue 5 shares. 7, 5 by 7 is equal to 5 by 7 percentage. So 71.42 percentage. Yes, you can go ahead and issue 71.4. That means for every 2 shares of UVR, you can issue 5 shares of DVR minimum. Then you can go ahead and continue to do the same thing. Then company must not have defaulted in filing the financial statements or annual returns for the last 3 years. Financial statements is section 134, annual returns is section 92. We see it in many places. The company should not have defaulted in section 92 and 134 for the purpose of what is this, accepting the deposits, for the purpose of issuing the debentures or this DVR shares, many places. And no subsisting default. What do you mean by subsisting default? There is no existing default. Sir, earlier I did the default, but I corrected it. That's okay. Now it should not be any default whenever you want to issue the DVR shares. With respect to what? Payment of dividend, repayment of deposits, debentures, or preference shares. Whenever you raise money from anything, you should not do any default in any payments. If you see here, they told dividend payment. Here it is deposits, debenture, preference shares, repayment. Because you accepted it, you are repaying it. First dividend is you did not accept, you are paying out of the profits only. There is one more point, plus interest on these instruments. Also, you should not default in repayment or payment of anything. And again, a company should not be penalized by court or tribunal in the last 3 years under multiple acts, RBI, SEBI, SACRA, FEMA, etc. Then DVR shares can be issued after 5 years from the end of financial year which the default was made good. That means you penalized by the court or you something has happened from the date you made good that default. That means consider I tell that company must not have defaulted in filing the statement or annual return. 24-25 financial statements you did not file in the same year, you filed in the next year. From the day you file it, there you count 5 years. After that, once 5 years is completed, then you can go for DVR shares. Then existing equity shares cannot be converted into DVR shares or vice versa. That means whenever you want to make sure the DVR shares to be there in the market, you issue one more type of security called as DVR. You can't convert existing normal shares into DVR shares. That is not going to happen. Or you can't bring back the DVR into equity, equity into UVR, and UVR into DVR. This is with respect to DVR shares. This is an important examination question. They asked in many cases, 4 or 5 marks question, many times. What are the conditions which are there for the issue of DVR shares? It should be authorized by AOA, pass the ordinary resolution. If it is listed company, postal ballot. If not, general ordinary resolution. Then voting power should not exceed 74% of post issue. And the company should not have defaulted in 134 and 92. Again, there should not be existing default in repayment or payment of dividend, preference shares, deposits, debentures. And again, not penalized by the court in the last 3 years. And 5 years has not elapsed from the day when it is made good. And the last point is, existing shares can't be converted into equity shares, DVR shares, and DVR shares can't be converted into same thing. Then comes share certificate. Now it is not applicable for listed company because every listed company has to go for only demat shares. Now they can't go for physical share certificates. What in case of private company or other companies, it is possible now. So non-demat share certificate. What is non-demat share certificate? If the shares are not there at the dematerialized format, then the shares are issued by issuing the share certificate. So every share certificate has to be distinctively numbered. What is distinctively numbered? If your share certificate is number 1, mine should be 2 and 3, 4, 5, 6. It should be distinct. Distinct means different. It should not be same, unique. Issued under the common seal are signed by 2 directors or 1 director plus 1 company secretary. We see the common signing authority. If you have the common seal, you do it, or you 2 directors sign it. If 2 directors are not exactly present in the company, 1 director and 1 company secretary. I think we showed that the company Reliance Limited's share certificate at the class. or I'll show it. I think I have that. See, this is a share certificate of the Reliance Industries Limited. It is having a common seal here. If you can you see this engraved one? If the common seal is not there, then you can go for two directors, one director and two directors. If the two directors are not there, one director and one company secretary can also sign this. And at least one of the two directors shall be a person other than MD or whole-time directors. If you look at the share certificate, one is MD and other one is other than MD. And director deemed to have signed if signature affixed via facsimile method, not rubber stamp. What is facsimile method? You know. See, one is manual signature. Facsimile kind of technology being used where it is being signed automatically. Not rubber stamp. Rubber stamp means you take a signature, make it a rubber stamp and you put it. No, that is not considered a signature. Facsimile kind of thing is multiple things are there. For example, when the Tata is there at Tata House, Ratan Tata used to sign multiple documents. There is one signing room here separately. In that signing room, what used to happen is some 20-25 machines will be there. He used to take every document is already correctly placed where it has to be signed. Tata will come, take one machine, there will be a pen inserted, take that pen and they start signing that. All the 25 machines will act on the similar way. That means the one signature will act as 25 signatures in 25 documents. Consider whenever he comes for recess or some other break, then he will visit to that signature room, signing room, then he goes out. Again, when he is going out of the home, then again comes the papers are already set ready by every other what is this, assistant. Then sign it again when he comes in. Again, some signing they'll save the time. Facsimile kind of thing is like email kind of thing only. DSC kind of multiple things are there in that. You can sign it in any way, but other than rubber stamp. Then comes a duplicate share certificate. What is duplicate share certificate? Certificate which is issued when the original certificate has been lost. That is called as duplicate share certificate. It may be issued if the original share certificate is lost, destroyed or defaced or mutilated. Mutilated means what? This and torn, that is broken, or it must be surrendered and you get a original share certificate. And if the company want, they can charge up to 50 rupees certificate fee. This is an MCQ point. And in the duplicate share certificate, you issue second certificate, you prominently print that it is a duplicate share certificate. And if it is in case of unlisted company, whenever I make application to the company to get the certificate, within 3 months you issue the share certificates to me. But if you are a listed company, it is a 45 days time period. It is also an MCQ point. And records has to be maintained in SH2 at a registered office or where the member of register of members that is kept. Demat shares means no physical certificate is required. Depository records are prima facie evidence of ownership. That means there are multiple depositories. One is CDSL, in NDSL, Central Depository Services Limited, National Depository Services Limited. See, it is like stock market, stock exchanges, BSE, NSE. Below under them, what is this? Depositories will come, CDSL, NDSL. Under them, DPs will come, depository participant like Zerodha, like Upstocks. These are depository participant under which we, as a or this customers or clients, will be registered. That means in the depository, CDSL or NDSL, consider if I buy the shares in Upstocks, automatically Upstocks is registered with maybe CDSL or NDSL. My name will be registered in DP, sorry, depositories. The record of that depositories is sufficient. I don't need any certificate. That's what they tell. And the punishment for fraudulent duplicate is, that means if you fraudulently duplicate the certificate, fine of minimum 5x value of face value, maximum 10x of the face value, 5 to 10x of the face value, or 10 crore rupees, whichever is higher. Because if you look at MRF share, it is now around 1.5 lakh rupees per share. You know what is the face value? 1 rupee. 10, 1, 10, you keep it as 10 only. I don't know exactly. I feel it is still 1 only. 10, we'll take it as 10 only. If you put it as 5x of 10 rupees, how much it is? 50 rupees. Here it is 100 rupees. That means 10 rupees or 100 rupees or 10 crore rupees, whichever is lower you take, it is only 100 rupees. But consider he got 1.5 lakh rupees from a share, 1,49,990 rupees. That is why they take it as a higher part, because that is very serious offense and that is even fraud. 447 is liable. That is with respect to share. Now comes voting rights and variation of rights. Sir, what is this voting rights? As I told, every company shares has a voting right. Main purpose of the investing in the shares is becoming the owner and getting the control of the company. How do I control? By way of voting in the different meetings of the company. And whenever the company want to change my rights, what is this variation of rights? Mainly comes for preference share capitals. Consider company already issued 10% preference share capitals. Now they don't have the money. They want to make it as 8% preference share capital. You want to change the rights. In equity shares also that is possible, but that is very rare situation. So one is equity shareholders. Every equity shareholder has the right to vote on all resolutions. When I tell all the resolutions, all the member resolution, not the board of directors. They can't enter the board of directors meeting and vote on those resolutions because board resolution is also there in multiple places. And how can they vote? Voting rights proportional to the share of paid up equity share capital. What do you mean by proportionate? If you are having 100 shares, you 100 give the 100 votes. I have 1 lakh shares, I'll give 1 lakh shares. So proportionate means to the extent of equity share capital. So Nidhi companies, if it is there, this can be an MCQ point. In case of Nidhi company, no member shall exercise voting rights in excess of 5% of the total voting rights. Even though he is holding 99% of the company, doesn't matter. Still, he can get only 5% maximum votes. Maximum is 5% in case of Nidhi company. Then preference shareholder. Voting rights apply only to resolutions. First of all, preference shares don't have any voting rights. But in few cases, they get voting rights with respect to where the company trying to change the rights of the preference shareholders. Our company did not pay the dividend for 2 continuous years. In few cases, it is possible. That directly affect preference shareholders' rights for winding up or repayment or reduction of capital. So voting rights is again proportional to the share paid up preference share capital. And if the preference dividend remains unpaid for 2 years plus, then preference shareholders has vote on all the resolutions. That means, see, what is this part? The moment you are trying to change dividend rate, the moment you are trying to change any rights which are attached to the preference shares, then they can vote on those resolutions which are connected to preference shares part. But if you don't pay dividend for 2 years, they can vote on equity shareholders resolutions also. They can vote on all the resolutions, not on the preferential resolutions. On means one is equity as well as preference. On both the resolutions they can vote here. Then comes variation. Rights of a class of share can be varied with consent of 3/4 of the holders. That means more than or equal to 75% of the thing, but that has to be in writing. Or pass a special resolution in a separate meeting. Why separate meeting? If you are changing the rights of preference shareholders, you conduct a separate meeting for preference shareholders. Then you pass 75% of the rights with respect to those preference shares. If 10% or more of issued shares of a class did not consent, apply to NCLT within 20 days, 21 days. See, here one problem is there. They are trying to tell that. I'll give an example. I'll take a better example. Consider they gave notice and they wanted to conduct the meeting on 25th of April 26. This is the meeting date. They're trying to tell that if you want to change anything, then you can change the rights can be varied with the consent of 3/4 of the holders. Look at the concept how contradictory they have given here. 75%. Now in the meeting people have attended. Still voting is going on. They got 76% voting. What is the purpose? They want to make it as 10% shares as 8% shares now. And they got 76% voting. Now, can they pass the resolution and tell that, okay, your rights has been changed? As per the first point, they can do it. But if you look at the second point, they try to tell that if 10% or more of issued shares of class means now I am talking about preference share capital, that class I am talking, did not consent, they can apply for NCLT within 21 days. That means even if you get 89% also, immediately you can't tell that your rights has been changed, because remaining 11% is still present. They have a right to go to the NCLT. That means at least you should wait till 90 point some percentage, then only you can tell that yes, resolution has been passed. Here after 75 you can tell that resolution passed, your rights are varied. But rights varying part still is not taking effect because of that 10% people have a right to go to the court. I think you understood. If not, no worries. Not important from examination. Company files copy of tribunal's order with ROC within 30 days after change of this thing, and issue new preference shares at pari passu. What is pari passu? Equal footing or equal rights. Does not require consent of existing preference shareholders. That means I am changing 10% preference share which is having a face value of 100, and I am trying to convert that into same 1000 rupees face value and trying to make some variation so that they'll get the same rights only. The moment you do it with the same rights, then you don't need to take any preference shareholders voting or any consent. You can do it anyway. Then comes calls, premium, discount on uncertified shares. What is calls? It is an earlier concept. Now it is not there in the real life. Maybe there in private limited company, not in public limited or listed company. Now everything is being issued at premium, not even what is this, calls. Whenever company is issuing the shares, if they don't want to raise the money, entire money in the same time, they'll raise as application money, allotment money, first call, second call, third call. So calls is allowed to do it. But whenever you make a call, the call has to be made on a uniform basis for all the holders of a given class of securities. Sir, 10 rupees share, 5 rupees is already paid up. There are 1000 shareholders. Now I am telling, okay, remaining out of 1000, only 500 shares pay me the remaining 5 rupees. The remaining 500 shareholders, let it be there. No, you can't do it. If you want 5 rupees, accept from 1000, all the 1000 people. If not, you accept 2 rupees or 2.5 rupees from all the people. It has to be uniform for everybody. It's the same class of shares. Then comes calls in advance. What is calls in advance? Consider company 10 rupees share, 5 rupees paid up. Company did not call the money. They did not tell that pay the money of the remaining 5. But I don't want to keep that liability. I told, okay, take this 5 rupees. Whenever you call, you adjust it. That means I am paying the money in advance with respect to the calls that is being made in the future. Can they accept the money? Yes, they can accept. But they can't put it in the share capital of the company. They should show it as a liability of the company. Because if the company does not call the money only, shares, on the shares, then it has to be refunded, liability. So company, if authorized by AOA, may accept advance payments, no voting rights valid until officially called up. That means unless until you call the money on shares, you can't give any voting rights for the advance money. Proportionate dividend. What is proportionate dividend? Sir, consider 10 rupees share is there, 5 rupees paid up. If you declare dividend as 20%, 20% is for 10 rupees paid up. I am paid only 5 rupees. So 20% into 5 by 10, that is 10% dividend paid. Whatever the paid up is there, that amount. Dividend may be paid up on proportionate, called paid up capital, including the calls in advance. If there is one thing I did not mention here is AOA authorization should be there. AOA authorization has to be compulsorily there here. Then comes 52 and 53. They are interlinked concept. They talk that, sir, can I issue shares at premium? Yes, they tell that, can I issue shares at discount? No, you can't issue. First of all, we should understand what is the premium and what is the discount. See, I told MRF share is face value is 10 rupees and that is trading in the market at 1.5 lakh rupees. Now company want to issue shares. Now, if the company issues shares at 11 rupees, is that considered as premium? If the company issues shares at 1.6 lakh rupees, is that considered as premium? At least 11. 1.6 is also premium only, but at least 11 has to be there. That means any value which is in excess of the face value is called as premium, and any value which is in deficit of face value is called as the discount. So we always consider for face value only, because even you take for the dividend payment also, dividend is always calculated on the face value. You take the interest of debentures also, that is also always calculated on the face value. Issue price I don't care. That is because of your company has a good brand value, everything, you can sell it for a higher price. See, for example, this laptop, consider it is very scarce in the market. MRP is only 50,000. But if this has so much of value, people are ready to buy it some 2 lakh rupees also. So there is a brand value or premium something they are paying. That is not shares on discount issue or premium. So premium received should be transferred to something called as SP account, security premium account, and that can be used for only 5 purposes. Only 5 purposes. That depends again 133 company or not 133 company. 133 is accounting standard company. So issuing fully paid up bonus shares, you can use it. or you can do the buyback also. One is bonus, second one is buyback. Third one is writing off of preliminary expenses or writing off of issue expenses. Writing off of expenses, commission, discount on shares or debentures, we call it as issue expense. You use the word issue expense only. And the last one is whenever you are redeeming the preference shares or debentures, if you are redeeming them at a premium amount, consider 100 rupees shares, you are repaying back 110. For the 10 rupees you can use this premium, not for the 100 rupees. Only for the premium on redemption of preference shares or debentures. You pay 100 rupees from your profit, 10 rupees from this security premium account. This SP account can be used for 5 purposes: bonus, buyback, issue expense, writing off of preliminary expense, and premium on redemption of preference or debentures. These are the 5 purposes. Then comes, can a company issue shares at discount? No, no company is allowed to issue shares at a discount. That is called as void. What is void? Not enforceable in the eyes of law. But there are 2 situations where the company can issue shares at discount. When one is sweat equity shares, second one is not that, reconstruction of the loans. Whenever you are not able to pay the loans back to the bank, then they can go and renegotiate and issue the shares at a discount. Exceptions are shares to the creditors when debt covered under statutory resolution plan or RBI debt reconstruction scheme. Debt reconstruction scheme, you can do it. I think one more thing which is not there. And sweat equity share. And sweat equity share. Second exception is, if you do anything with respect to that thing, then refund all the money with 12% interest. Penalty is amount raised or 5 lakh rupees, whichever is less. That means you should not issue shares at discount for the public, but you issued shares to the public at discount. In that case, you should refund everything which is raised from the public, refund it, pay 12% interest for as an interest, as well as there is a penalty of how much you are raised or 5 lakh rupees, whichever is less. Sir, what is the difference between penalty and interest? See, mainly penalty, here it is mainly interest. Whenever I tell that interest is there, consider I am a company, Shashi has made an application. Now I should refund his money, pay interest to Shashi only, 12%. But the penalty should be paid for the government, ROC or MCA. So penalty is for the authorities, interest is for the shareholders. Then comes 54, sweat equity shares. This is also important, many times asked in the examination. Equity shares to directors or employees can be issued at a discount or even for non-cash consideration also. Why? Because they make patent, know-how, technology, something available, or they are giving commitment for working some kind of thing that is happening. But there are something called as conditions. Authorization should be done by special resolution, and the moment authorization comes from special resolution, within 12 months of that special resolution, you have to issue the shares to the directors or employees. And how much you can issue shares at sweat equity shares? There are 2 conditions: 15% limit per year. That is either 15% of the paid up equity share capital or 5 crore rupees worth of equity share capital, whichever is higher you can issue. But in the entire lifetime of the company, it can't be more than 25% of the total share capital of the company. Sir, I want to issue in the current year. Yes, you can issue maximum 15% or 5 crore rupees worth of face value. This is 5 crores. We never talk about issue value. It is about face value, because what is there in the balance sheet, that is what we are always speaking about. So 5 crore face value or 15% of the total shares which is already there. Consider already 1000 shares are there. 1000 shares into 15 percentage, 150 shares you can issue, or whatever the total share capital is there, right? That multiply 5 crore rupees worth of capital, whichever is higher, you can go and issue it. But next year also you want to issue, yes, you can issue, but 15% is already issued, na? Total is there. Compare remaining whatever the balance is there, 25 minus already issued. You calculate what is the capital, 25% minus the shares already issued, the remaining shares you can issue. The only change which happens is, conceptually, if you go, consider 1000 shares are already there. Now I issued 150 shares to the public. Now it was 15% was there. Now what is the total thing? 1150. Now I want to issue in the current year also. What is this? This is equity shares. Now maximum I can issue is how much? 25 percentage. If you calculate 25 percentage, 1150 into 25 percentage, do it. 250 plus 100, 25, 275 plus 12.5, 287.5, 288. 288 is a 25% of the capital. But you already issued 150. So remaining 138 you can issue in the current year. If you go conceptually also, that is still a bit different, because when I say here 15% of the paid up share capital, paid up equity, share capital means equity. If I, unless until I tell this thing reference. Now what is after issuing this 288? What is the total? 1150 plus 288. 1438. This is what my capital. Should I compute 25% on this 1150 or 1438? Huh? 1150. Huh? 1438. Why? Okay. No, I'm just asking what is your thought on this. If you look at the DVR shares, we calculated something called as 74% of 1438. Should I calculate one on 1438 or 1150? Here, for certificate shares. What you feel, you tell me. 1150, okay. 1438, okay. 1438. 1438. 1150. You, sir? Don't know. It is 1150. Because they never told it as post equity share capital. They just told, see here, 15% of paid up share capital. When I tell 15% of paid up share capital, what is my paid up share capital now? Sir, what will happen? I don't have that. After issue only that paid up share capital will happen. But what is the existing paid up share capital? Compute 15% and issue it. Now after issue in the current year, my paid up share capital has come down to has increased from 1000 to 1150. Now existing paid up share capital is 1150. Calculate 25% on that minus 15% which is already issued. So again you don't do 10% as it has 15 already done, 20, 10 now I am doing. No, because your base has increased from 1000 to 1150 now. The differentiation will come. That is why you calculate 25% on this amount, this number of shares, then minus whatever the shares that is issued. Then that will come it as 25 percentage. Yes. Next one is, and there is a lock-in period of, it can't be transferred for at least 3 years from the date of allotment. Valuation by registered valuer. Employees includes directors, subsidiaries, holding companies. That means if you want to issue the shares of your company employees, you issue it. If you want to issue the equity shares for your holding company employees, allowed. If you want to issue shares for your subsidiary company employees, that is allowed. If you want to issue the director of your company, holding company, subsidiary company, everything is allowed, but associate is not available. Because holding and subsidiary is nothing but father and son. But associate is something like relatives. That is not possible. Relatives are always cunning people. You should not trust them. That is with respect to the equity shares. Section 54. Then comes preference share capital. How do you wish the preference? How do you redeem the preferences? Mainly section 55. This OK area is not tested in the examination. Conditions for issue. Whenever company want to issue the share capital, it should be authorized by AOA and there should be special resolution in general meeting. If no subsisting default in redemption or dividend of payment, this condition is anyway there. The moment you want to raise the money anywhere, you should not be having any default with respect to payment of dividend or redemption of shares. And company cannot issue irredeemable preference shares. That means what? There should be a lifetime for every preference shares. Sir, what is the lifetime for preference shares? They are trying to tell that maximum is 20 years from the date of issue. You issue today plus 20 years. That is only maximum period. But only under certain situations where there is a what is this? Project take a longer period of time. The recovery also will take longer period of time in that cases. Like infrastructure company, somebody is constructing a national highway. That construction only takes some 10 years, maybe some 5 years. Dam construction, that what is this? A big what is this in electricity project or solar project that takes so much of time. In that case, when can they recover the money and pay it back? That is not possible. That is why you can go up to 30 years. That means plus 10 years is given, provided you should redeem 10% every year from 21st year. Don't repay everything in 20th year. 21st year you repay 10%, again 10, again 10 for next 10 years. 10%, so 100% it is gone in 10 years. Now, once we know that preference shares can't be a irredeemable preference shares, definitely that has to be redeemed. There are multiple types of preference shares. 8 kinds of preference shares are there: cumulative, non-cumulative, participatory, non-participatory, participatory, convertible, non-convertible, redeemable, irredeemable. I am just considering now redeemable preference shares and irredeemable preference shares. So redemption only from, whenever you want to repay the money, you can repay money only from with the profits of the company. When I say profits, those profits which are available for payment of dividend. See, when the company makes the profit, there are multiple scenarios. One, they keep it as retained earnings, that is general reserves, or they can keep it under some specific reserves. For example, sinking fund reserve, for example, debenture redemption reserve, for example, deposit redemption reserve. This is also part of profits only, that is kept as separate reserves. Whenever you want to redeem these preference shares, you should redeem only from those profits which is available for dividend. These three things are not available for dividend. That means you can only go for either general reserve or P&L money for the purpose of redemption. Or there is one more option also. What is that option? They tell that, see, if you don't have the money, don't worry. If you want to redeem that, but if you don't have the money, you issue the one more kind of security. Raise the money, repay the old preference shares. Issue one more, then get the money and repay it. Or proceed from the fresh issue for redemption. Preference shares must be fully paid up to be redeemed. That means if it is partly paid up, firstly make it as fully paid up, then you can repay the money. If redeemed from profits, there is one extra condition. Whatever the money you take it from profits. See, when I say profits available for dividend, that is the money available should be given for equity shareholders, but you are giving it for preference shareholders, PSC. That is why whenever you touch this profits, at least whatever the nominal amount of the shares are there, preference shares, you put it under the head called as CRR, capital redemption reserve. Sir, what is that capital redemption reserve? That can be used only for one purpose, no other purpose. Issue of fully paid up bonus shares. When I say issue of fully paid up bonus shares is available only for equity shareholders. That means at least the face value of the money is coming back to the equity shareholders. If the fresh issue is made, no need to transfer any money to the shareholders, because you are not taking their money, so no need to keep aside some money. If you are touching their money, keep it face value or nominal value equal to that part. If you are unable to redeem, then with the consent of 3/4 of the preference shareholders plus national company law tribunal approval, you can issue further redeemable preference shares equal to the due amount. For example, company already issued 1000 rupees shares. It has to be redeemed at 20th year. Now 19 years they paid the interest, dividend. 20th year they should pay the dividend and principal, totally 1100 rupees. Now they don't have the money. They told to all the preference shareholders, see, I don't have the money, what can I do? The company only proposed, see, I should give you 1100 now. Don't worry, not for 1000, I'll issue all the preference shares worth 1100 rupees for you. So that whenever I pay the dividend from next year, I'll not pay in 1000, I'll pay in 1100, because this becomes the face value later or issue price. But if you don't want to do it, get the special resolution by them and NCLT approval also. And issue further redeemable preference shares. That means existing further redeemable means after some period you can redeem it. NCLT may order for redemption for preference shareholders who did not consent. That means out of 1100 only 900 only told okay, remaining 100 not tell okay. Then okay, pay the money for 100, remaining 900 you issue the further redeemable preference shares. And such issue or redemption does not increase or reduce the company capital, because the same thing, old one goes and new one comes. This is with respect to the preference share capital. Then transfer and transmission of securities. What is the difference between transfer and transmission? Transfer is an voluntary activity where person voluntarily takes part in shares transfer of shares from person to person. But when I say transmission, it is an act of law. It is like the succession. Whenever somebody becomes incapable to the contract, for example, dies, becomes insolvency, lunatic, unsound mind, then whatever the things are there, that will be transferred, not transferred, transmitted to the next generation or legal heirs or agent or their representative nominees. So transfer requirements are, there should be an instrument of transfer. That means if I'm selling my shares to MJ, then I should execute an instrument and give it to the company. That should be duly stamped, dated and executed by both the parties. That should include name, address, occupation of transferee, delivered to the company within 60 days of execution along with the share certificate. I told earlier share certificate is in my name. I tell, okay, I sold the shares to MJ. You take this transfer deed, take the share certificate, register the name of MJ, remove my name, issue the new certificate to MJ. That is what it happens. Transmission means allowed upon receiving intimation from the entitled person. For example, when the father dies, the son only goes to the company and tells that, see, I am entitled now, my father is no longer there, then you please transmit my shares. No instrument is required, because if you can have the instrument, it is called as transfer. Because that transfer is not going to happen, because the person only not there to sign it, that is why instrument is not required. What is that? Death of legal upon a death of a party, legal representative will get a right to those shares. Upon insolvency, official receiver will get. Official receiver means liquidator kind. Upon lunacy, that means mental, then court appointed administrator will get a right to apply for the company and get the shares in their name. Period for delivering the certificate. If you are an MOA subscriber, that means at the incorporation of company you signed it and become a member, then within 2 months of incorporation, company should give the share certificates to you. If it is allotment, that means IPO, FPO, everything, then it is 2 months of allotment, similar 2 months only. If it is transfer or transmission, 1 month of the receipt. Whatever we discussed, this is for shares. Now comes the debentures. It is 6 months from the allotment. So MOA subscriber 2 months, MOA and allotment within 2 months. Then transfer or transmission, that is 1 month. Then debt, debenture 6 months. This can be an MCQ point. Then if the transfer is a forged transfer, not valid. First of all, forgery is nullity. So forged transfer is nullity. No legal binding. Real owner remains the legal shareholder of the shares. Company can be forced to delete the transferee's name and restore the original shareholders. For example, one son came and told that my father died, please register my name, and he signed something, or he told that my father shareholder is his father. He told that he is forged the signature and my father sold the shares to me, register in my name. Company took that instrument and registered it. Later, the dead person went to the company and asked, where is my dividend? Why I am not getting this thing? Because he did not know that that is being forced. When that person comes to know that it is being forced, then company has to compulsorily force it to restore the original shareholder name, remove the forced person name. If it is an innocent buyer, then company must restore original owner, but may compensate innocent buyer. Refusal and appeal. That means whenever you are filing to the company to transfer the shares from one party to other party, company is refusing it. Something is happening. In that case, if it is a private company, notice to transfer or and transfer within 30 days of refusal. Say I can't register, take this notice. Transferee can go and appeal in tribunal within 30 days of refusal notice or 60 days if no notice. I delivered it on 1st January, they refused it. The moment I get a notice, within that I can go and appeal it 30 days. If I don't get any notice within 30 days, then within next 30 days, 60 days I can go and appeal. Public company means appeal to NCLT within 60 days of refusal or 90 days of notice. 30, 60 will become 60 and 90 year. That is the difference. And NC will complete everything within 10 days. Non-compliance is there, imprisonment up to 1 to 3 years plus fine of 1 to 5 lakh rupees. Imprisonment and fine, don't worry, because there are multiple places are there. You just ignore that. Then comes further issue, bonus shares, alteration of capital. We have two kinds of further issues, that is rights issue and bonus issue. So what is rights issue? See, we are not issuing the shares, we are giving the rights to purchase the shares of the company. If you want, you can go and purchase. If you don't want to, leave that right. When the rights are issued, the party who gets the right has three options. Consider company has issued me the rights. I have an option to go to the company, tell that, see, I have a right, sell the shares at a discounted price. Whatever the share price is there in the market, I will get at a lesser price. If not, I can just keep quiet, let that get cancelled. Third one is I can renounce my right. Renounce means transfer my right to some party and I collect some premium. He also gets the shares at a discounted price. Shares that is offered only to existing holders in proportion to the paid up capital. Employees under ESOP by special resolution, you can pass it. Any other persons if it is authorized by special resolution. Letter of offer has to be there. Acceptance period minimum 15 days, maximum 30 days. So you have a right to purchase the shares within 20 days. At least 15 days, after 15 days and within 30 days. And board resolution only required. No general meeting approval needed for right issue to existing shareholders. Bonus shares means issuing to the existing shareholders as a fully paid up shares at free of cost, zero money. That means if it is a balance sheet, equity share capital is there, then reserves is there, reserves and surplus. You take this reserves and surplus money and put it back to the equity share capital. Balance sheet still remains same, but this below line item will go and put it on the above line item. We call it as capitalization of reserves. So sources are, you can use free reserves. What are free reserves? General reserve or P&L. Both are free reserves. Or you can use SP account, because if you remember the SP account, that can be used for five purposes. One is bonus shares, so this is bonus shares, or you can use CRR only, but you can't use revaluation reserves. What is revaluation reserves? Because they are not actual reserves, it is just a notional reserves. I purchased one building in the balance sheet, it is there at 100 rupees in 1990. Today also it is 100 rupees because of the historical cost model, but actual value of the building is 100 crore rupees. I revalued it, but I did not put that money in the balance sheet because my balance sheet does not allow it, accounting treatment. So that 99 crore, 99 lakh, 900 rupees, you can't treat it as your profit unless until you sell that building. The moment you sell that building, that becomes your money, actual profit and loss, then you can use it for general reserves or free reserves part. For that you should use AOA authorization, board approval has to be there, and OR general meeting. But before you issue the bonus shares, if see, bonus shares can be issued to the existing shareholders in the proportion of their existing shares. But whenever you want to issue, that has to be the fully paid up shares before issuing the bonus shares. What is fully paid up shares? Sir, 1000 shares of 10 each, 5 rupees paid up. No, you can't issue bonus shares. You first receive another 5 rupees, make it fully paid up, then issue the bonus shares. But this also can be an MCQ point. Bonus shares cannot be issued in lieu of the dividend. Why? When the bonus shares are issued or when the dividends are issued, I'll take from the dividend part. Company gave the dividend. Isn't it the income for a person in the current year? If it is income for the person in the current year, income increases, tax also increases, they have to pay the tax. But consider from the bonus shares angle. Company issues the bonus shares. Is it the income? Not it. It is an asset, not the income. There is a or this gain and asset or this profit. There's a two different things. Sir, when will that become my income? Whenever I sell it. I sold after 20 years. Till 20 years, tax is lost. That is why if you decided to give the dividend, you give the dividend. Don't give bonus shares instead of dividend. In lieu means it is instead. Then alteration of share capital is there, section 61. This is also important from examination angle. This bonus is also important. So what is alteration of share capital? Alteration of share capital can be done. Section 61 tells that 5 ways. What is it? Increase the capital, reduce the capital, convert the stock into shares, shares into stock, then consolidate, subdivide, 5 purposes. Increase the other share capital, consolidate it, divide into larger shares. Consolidate means what? 100 shares of 10 rupees each. Made it as 10 shares of 100 rupees each. That means 100 shares is on 10 shares ಮಾಡ್ತಾ ಇದ್ದೀನಿ. Face value on 10 is 100 ಮಾಡ್ತಾ ಇದ್ದೀನಿ. That's okay. We can let us consolidate. We are merging 10 shares into 1 share, making as one consolidation. Subdivision means what? 100 shares of 10 each, made it as 1000 shares of 1 each. So that is divided into 10 shares. That is subdivision. Or you convert fully paid up shares into stock, or other ways, and cancel the unsubscribed shares. These are the things. Time period is okay. Reduction of share capital. See, there is a difference between section 66 and section 68 buyback. Section 66 and section 68 reduction and buyback. What is reduction of share capital? Company may reduce the share capital by special resolution, but it requires even LCLT approval also. What is that reduction means? You can extinguish or reduce the liability and unpaid capital, or the shares which are you can cancel, which are lost paid up capital, or pay off the excess capital. For example, what is the extinguish or reduce the liability and unpaid shares? You had already issued 100 shares of 10 each, 5 rupees paid up. You thought you needed 1000 rupees, but you actually had 5,000, but you already have 500. Now you decided, okay, 500 is enough for me to do the business. Then you can cancel the 10 rupee shares and make it as 5 rupee shares, 5 rupee paid up. We call it as cancellation. Extinguisher, reduce the liability of unpaid up capital. Cancel or lost the paid up capital. What is cancel? Consider authorized share capital is 100 shares, but you issued only 80 shares. Remaining 20 shares is there, you cancel that. We don't want it. Cancel the share. Some exceptions requiring no NCLT approval is buyback and redemption of preference shares under 55, because that is dealt in separate sections where they have the power to do that. Then the remaining things is okay in that. Then comes buyback, very important section. What are the sources available for buyback? You can use free reserves, security premium account, because one of the point under SP is also buyback 68, and proceeds of the issue of any shares. If you want to buy old shares, you can issue the new shares and buy the old shares also. But again, AOA should authorize the buyback. Special resolution is also required only when the buyback is more than 10%. A special resolution is required only when buyback is more than 10%. Sir, up to 10%, what is this? Board resolution is sufficient. Less than or equal to 10%, BR is sufficient. More than 10%, SR is sufficient. More than 10%, less than 25%, less than or equal to 25%. So more than 25% is not allowed at all. It's gone out of the thing, league. Maximum 25% of the aggregate paid up share capital, free reserves plus security premium put together, you can buy back in a financial year. And buyback up to 25% of the capital is only allowed. I think I forgot one point here, not here, somewhere. I recollected now. 1 second. This thing. Sweat equity shares. In a single year, you can issue 15%, 15%. In the lifetime, you can issue 25%. But if you are a startup company, startup company, you can issue up to 50% of the paid up share capital. So what is startup company? If you are not completed 10 years after incorporation, then you are a startup company. Or you did not cross 100 crore rupees of turnover in any financial year for the 10 years, then also you are startup company. So no sir, I am incorporated in the last year, current year I already doing 120 crores turnover, then gone, you are not a startup company. Both the conditions, within 10 years it has to be there, within 100 crores turnover only every year it has to be there. This is an MCQ point, this startup company's part. Coming back, whenever you do the buyback, post buyback, what is the debt equity ratio is there, that should not exceed 2:1. And whenever you want to buy back the shares, only fully paid up shares can be bought back. You can't buy back everything else. And the moment you buy it, you can't buy one more category of shares within 1 year from the closure of previous buyback. There are two conditions here. One is buyback part. Consider I have equity share capital 1000 shares of 10 each. Now I bought 10%. That means I have board resolutions. I bought 100 shares. Now when did I buy? I bought it on 1125. I want to buy it on 31. 31 10 25. Can I buy back one more 100% shares? Because anyway, in 1 year I have 25 percentage. So I want to go for special resolution. I will pass it. But can I buy this back? Not possible because there is a lock-in period of 1 year. The moment you buy on 1125, year ends on what? 31 12 25. Before this period, you can't buy one more buyback. You can't do one more buyback. You want to do that, you wait for one more year. That means completion of 31 12 25. In 26, you can buy back. No buyback within 1 year from the closure of previous buyback. There is one more condition that states that you already bought back the shares. Now you want the money. Can you issue the similar kind of shares? They tell that same kind of shares you can't issue for 6 months after buyback. Issue of the same kind is for 6 months, not allowed. Buying back up the one more kind of securities is not allowed for 1 year. Two conditions, 6 months and 1 year part. You should be remembering that is an MCQ points. They may ask 5 marks question, they may ask MCQ also. Some procedural part is there. You go through that 15 days, 30 days, but I'll discuss that. Maximum 25%. No, it is in financial year. In the current year also, whatever the paid up share capital is there, in that 25% you can buy it. Now, generally that is not going to happen, what you are practically asking. If they do it for 5 years, then they are gone. Again, whenever you want to buy back, first you should give the letter of offer. Sir, where can I buy back? There are multiple sources of buyback. You might have issued employee stock option plan or sweat equity shares for anybody. ESOP and sweat equity shares, you can buy back from the employees also. Or you can buy back from some private placement people also. Or you can buy back from the public also. So there are multiple ways. But whenever you want to buy back, you give the offer letter. Whenever you give the offer letter, see, we want to buy back shares. Market rate is 1500. We are ready to pay 20% premium, 1800. Anybody, I want to, out of 1000 shares, I want to buy 100 shares. First come, first serve basis. 100 people who surrender first will get the money. That's how it happens. So, file the letter of offer with ROC, issue it to the members within 20 days of filing. Then whenever you issue it to the members, that is open only for, minimum 15 days and maximum is 30 days. Once the shares comes surrendered, within 12 months you should complete everything and pass the resolution that we completed the buyback. And you should, the moment you buy back, you should make the payment to shareholders within 7 days of verification, that is the real owner, everything. And you should destroy all the bought back shares within 7 days after buyback. Destroy means what? Consider company bought my share certificate number 1280, 1250, 1235, something. All the share certificate number has to be cancelled, extinguished. But they should even declare the solvency also. What is solvency? See, whenever I say buyback, company is paying the money. If the company buy back the shares and pays the money, what about the future running of the company? Working capital, you have every money to pay salary, rent, everything. Yes, sir. After buyback, also I have sufficient money to take care. I am solvent enough for at least 12 months. That filing has to be done for ROC. That should be signed by at least 2 directors, including 1 MD. Here also same condition. If you are buying back from free reserves. Free reserves means what? General reserves and profit and loss account. Then whatever the nominal value of the shares you are buying back, transfer that to CRR. You give their money to themselves. Again, same conditions. If you are done any default in the repayment of deposits, debentures, preference shares, dividends, or term loans, then you can't buy back. But whenever you made good that, consider you did not pay dividend within 30 days, there is a default. Consider you paid after 3 months. From the 3 months, wait for 3 years, Once the 3 years is over, then you can buy back. The waiting period is 3 years. Buyback allowed if the default are rectified and 3 years have been passed since it is cleared. What is the 5 years condition? 5 years condition is there for what part? ಯಾವ instrument is 5 years? Is it preference shares? Is it sweat equity shares? We have the mobile phones. Open it. Everybody. On the camera. Look at your face. If there is any default, then fine of 1 lakh to 3 lakh rupees will be there. This is what? Buyback of shares. 68. ಫೋಟೋನ ನೋಡ್ತಾ ಇದ್ದೇನೆ ಡೈರೆಕ್ಟ್ ಬುಕ್ ಇದೆಯಲ್ಲ ಬುಕ್ ಅಲ್ಲೇ ನೋಡು. Then last section which we have is debentures in this chapter. What is debenture? Debenture is like a loan or debt kind of thing that does not carry any voting rights. They don't have any this ownership of the company. That is, debentures can be issued only for a fixed period of time with an fixed interest rate, and interest rate can be in a periodically payable. That is, you can pay monthly, you can pay semi-annually, you can pay annually also. And the debentures also can be of at a limited period of time. It can't be an irredeemable debentures. It can be only redeemable debentures. And debentures can be again convertible, non-convertible, everything can be there. Similar kinds it is there. But whenever the company issues the debentures, if the company issues the debentures and the debenture holders are more than some certain number of members, then compulsory company has to appoint somebody called as debenture trustee. The debenture trustee will act as a medium person so that debenture people will talk to the debenture trustee and debenture trustee will talk to the company. Again, the same communication point is there. If something decision is taken by the company against the debenture holders, then debenture trustee will call the meeting, debentures meeting, and intimate to the debentures. He will try to simply protect the interest of the debentures holders. That is what he does generally. Then company also has to create something called as a DRR, debenture redemption reserve. Because you can't get the money, entire money to pay it in a single year. That is why every year you keep it aside, small kind of shifting. So debenture includes debenture stock, bonds, or any other instrument evidencing a debt with or without the charge on asset. What is charge with or without the charge on assets? Whether it is secured debentures or whether it is unsecured debentures, debentures can be debentures. And it does not carry out any voting rights. Debentures are a movable property which can be transferred from person to person. It can be sourced secured or unsecured, and there should be debenture certificates that has to be issued within 6 months of allotment. If you remember, just now we written 3 things. 3 things we written. What are the 3 things you tell me? I have specifically written. Whenever a person makes the duplicate share certificate application, listed company 45 days within that. If not 3 months. Then if it is debentures, then it has to be within 6 months that has to be paid. Here also the result is 6 months is there. The moment you allot, within 6 months you should give a certificate to them. If it is secured debentures, redemption period is maximum 10 years. The same exemption is there for infrastructure companies up to 30 years. Preference shares maximum period is 20, debentures maximum period is 10, having that infra as an exception. Company has to compulsorily appoint a debenture trustee if the members are exceeding 500. Debenture members are exceeding 500. Written consent is required before appointment and debenture trust deed in the form SS12 within 3 months of closure of issue. That means you want to appoint somebody as a debenture trustee, first you ask him, is he ready to become a debenture trustee or not? If yes, then you can appoint. If you are a beneficiary holding the shares in the company, then you are disqualified. Because if you are holding the shares, you will try to, you are a owner, shareholder means owner, you will try to protect your interest. Then who is going to protect the debenture holder's interest? That is why disqualified. You should be an independent party. Promoter or director, KMP, officer of the company or associate or relative of promoter, everybody, or anyone who is indebted to the company, or anyone who is having a pecuniary. Pecuniary means what? Monetary, financial or monetary relationship more than or equal to 2% of the gross turnover or 50 lakh rupees in the preceding 2 financial years or current financial years. They are also disqualified from being appointed as debenture trustee. Then DRR, all India financial institutions and banking financial companies not required to create any DRR. Listed companies exempted, but NBFCs which are registered under 45 IA and housing finance corporations which are not registered with national housing banks are required to create it. Unlisted companies is there, that can be an MCQ point. DRR they should create 10% of outstanding debentures, whether it is publicly issued or privately placed. And investment, 15% of the debentures maturing during the financial year must be invested during or on or before 30th April of the scheduled bank deposits on unencumbered government securities or instruments of Indian Trust Act, and that should be used only for redemption of debentures. What they are trying to tell is, under these two situations, you are an unlisted company which are issued debentures, consider total debentures is 1000, out of which at least 100 you have to keep it as the debenture redemption reserve. And the money which is kept it, can you keep it as cash? No, you should invest it somewhere. Sir, how much you should invest? 15% of the debentures which are maturing in the what is this? 30th April of the year. 30th April. That means current year starts on 1st April. 30th April ಯಾವ್ದಾದ್ರು ಮೆಚೂರ್ ಆಗ್ತಾ ಇದೆ ಅಂದ್ರೆ then you should deposit that 15% of maturing amount in a scheduled bank, or you can invest in a government securities which are unencumbered or Indian Trust Act instruments, etc. See, 15% of debentures maturing during the financial year must be invested or deposited. Okay. If any debentures are maturing before 31st March of current year, any month, August, September, October, November, December to March, then whatever the money that is being matured now, 15% of that matured amount should be invested by 30th April of the current year. Investment date is 30th April regarding the debentures which are maturing in the current financial year. That maturity can happen on 5th of April also. That can happen 31st of March also. We don't have any problem. 30th April is for investment date, not for the maturity date. That is with respect to debentures. Please have a look into everything and exam key tips. If you have any doubts, do note it down. We'll discuss that. Today is Mahavir Jayanti, yeah? Yesterday. Oh, market is also closed. You can take, huh? Anytime we can take half an hour break. You decide whenever we want. Huh? We can take now also. I don't have any problem. It is already 9:40. Questions we have to do. No, we will not discuss every question because it takes so much of time. We will just oversee the questions. So security premium usable part they're talking. So MNP Tech Private Limited raises a securities premium, raised a security premium balance of 10 crore rupees. The CFO proposes write-off of advertisement expense of 50 lakh. Can they do it? Security premium can be used only for 5 purposes: writing off of preliminary expense, issue expense, buyback, bonus, premium on redemption of preference or bonus shares. This is not possible. Issue of fully paid up bonus shares of 2 crores. Yes, that can be done. Provides 1.5 crores for premium on redemption of preference shares. Yes, that is also permitted. Distribute 1 crore rupees as interim dividend. Not possible because you can't give the dividend. There are only 5 permissible uses for the things. Examine the validity of things. That is asked in the Jan 26 examination. How many marks? 5 marks. Easy 5 marks. Chapter 4, right? But you should write the entire provision. 5 purposes, then you should tell the facts and conclusion. Yes, this can be used, this can't be used, this can be used, this can't be used. That is how you should answer it. Under 52(2), SP account may be applied for issue of unissued shares at a fully paid up bonus shares. You write it as issue of fully paid up bonus shares. Don't complicate it. Writing of preliminary expense, writing off of issue expense, or premium and redemption of preference shares, or buyback of securities under 68. This is the provisions. First paragraph, this comes this way. Then next paragraph comes as advertisement expense cannot be written off. Not preliminary. It is not a preliminary expense. Advertisement is not a preliminary expense. It is a subsequent expense. And fully paid up bonus shares, yes, can be done. It is permitted. Redemption of preferences, yes, can be provided. It is expressly permitted. Interim dividend cannot be paid because it is not. It can be declared only out of the profits, not from the security premium account. I'll open one more file. Answer and question. Then forward troops planned loan of 110 crores to a trust to purchase forward troops own shares for employees. Is it allowed? Purchasing of own shares not allowed except in case of 68. Buyback is only allowed. Direct loans to employees to buy shares of securities of troops limited. I think we did not cover one part. I will discuss now only that we discussed in the regular class. Company can give a loan to the employees to buy its own shares. Sir, how much loan they can give? To the extent of maximum 6 months salary. Whatever the employee salary is there, multiplied by 6 months, that can be given as a loan for them to buy the shares. That is section 67. Their shares are holding company shares also. Holding company. Mr. Strong approved scheme 1 but opposed the scheme 2. That means they are telling that okay, we will give loan to some trust to purchase our own shares. That is okay, but not second one. Exactly opposite has to be done. They gave 5 months salary, that is within the limit. So it prohibits a public company from giving any financial assistance either directly or indirectly for any purpose or purchase or subscribing for its own shares etc of holding company. The exception is a bona fide genuine employee and benefit the scheme for purchase of fully paid up shares. Company can itself limited to 6 months salary they can give. Trust scheme, if I put it directly, it is not valid. Second one is Strong's contention. Claim the loans for holding company shares are permissible and is sorry wait. Mr. Strong's claim that loans of holding company shares are permissible is incorrect. Who is Strong? I did not read the full question. That is what the problem. Strong approved scheme 1 but opposed scheme 2. Yes, that is, see, he opposed scheme 2, telling that it is not possible, but that is incorrect. But it is possible. That is what we are trying to tell. Then Epiroc Limited is considering a buyback of its own shares. Advise on what are the sources from which buyback can be made. Yes, tell me what are the sources can be buyback made. Pre-reserves, security premium. No, CRR is only for buyback. Sorry, bonus. Fresh issue. Three sources. And what are the conditions must be satisfied before buyback? Yes. EOI should be authorized. Then? Huh? No? Notice has to be given. SR has to be passed. If it is up to 10%, BR is okay. More than 10%, up to 25%, SR has to be passed. Then complete the buyback within what? At least give 15 days. No, that 15 days. 15 to 30 days. Okay. Post buyback, the debt equity ratio should be 2:1. They should declare the solvency. And they should come extinguish the shares which they bought back within 7 days. Extinguish or destroy the shares. Those are the conditions. And what are the prohibitions on buyback? You can't use the revaluation reserves for buyback. You can't buy back more than 25%. You can't buy back partly paid up shares. Those prohibitions are there. Then it is actually next chapter concept, section 19. Next part means chapter 7. Variation in shareholder size. Can you do it? Yes, but 3/4 of the value, those conditions are there. Calls in advance, calls in arrear. September 24. Tab Health Products issued 5 lakh equity shares of 100 each, 50 paid up. A call was made for 30 per share. That means out of remaining 50, they are calling 30. Mr. GH holding 10,000 shares paid all the money in advance and claimed interest on advance and also dividend on advance money. Is it possible to claim dividend on advance money? Not possible. Mr. LK holding 15,000 shares did not pay the first call. Directors called the entire money due. Examine. Is Mr. GH claim for interest and dividend on advance money is valid? Not valid. Can the directors call the entire amount due from Mr. LK? No, because it has to be done on a uniform basis. You can't do it on this ununiform basis with respect to everybody. A bonus share is a distribution of capitalized undivided profits having identity and value capable of being bought and sold. Elaborate the prerequisites of issue of bonus shares. The bonus shares has to be discussed there. You can issue bonus shares only for fully paid up equity shares, and bonus shares is a capitalizing the reserves. You can't issue bonus instead of issuing the dividend. Some conditions has to be written. Then John Private Limited, an unlisted company incorporated in 12 with a share capital of 50 CR. The company decided to issue 10% sweat equity share with a locking period of 5 years. First of all, 5 years is wrong. 3 years is the lock-in period. It is a startup company. How much they issued? 10% equity shares. Okay. Explain the provisions for issue of equity shares by a startup company under Companies Act. Up to 50% they can go. AO authorization, though all those conditions has to be there. Buyback of shares is a same repeated question. Almost buyback of shares, calls in advance, calls in arrears, variation of shareholders' right. Somewhere they asked out of the balloon, that is free reserves. What is the definition of free reserves? Free reserves mainly they consider general reserve, P&L and security premium. Security premium is also not free reserve. And this is security premium application. Where can you apply security premium? 5 purposes. Those 5 purposes only. Section 52. Buyback, bonus, issue of preliminary, issue expense, preliminary expense, and redemption of premium and redemption of preference shares or debentures. That's it. You can do it. If you understood the concept clearly, you can do it easily. Should speed up a little bit. I think we are slowing down too much. See, if it is not completed within 3 days, don't worry, we will take it 4th day also. But we will complete the entire subject. I plan 20 hours. But if we exclude, break everything, we will do only 5 hours on effective basis. So 5 into 4, 20 hours. Then there only it comes. And this Saturday will be cricket. Be ready. Definitely, we are already booking the round. AVS college something is there na. PAS college or what? We are discussing. We'll book it today. So we'll take a break now. See you. Okay, let's continue. So, chapter 5 and 6 we'll discuss at a later point of time. So now we will go ahead with chapter 7, which is very important. After that, we'll come back to 5 and 6. That is anyway not so important. So chapter 7 is one of the lengthiest chapter and contains many sections. So that is management and administration. Here we have to discuss few sections mainly. That is section 88. First one is the register of members. What is that register of members? See, whenever a company, we tell that company issues the share, company issues the debentures, company has debenture holders, multiple things. Then company has to maintain a register. Register is kind of book kind of thing, maybe an electronic or physical kind of part. It has to maintain the list of people that were the members of that company. So every company compulsorily maintain the 3 registers. One is register of members, register of debenture holders, and register of other security holders. When I say other security holders, it can be deposit holders, other it can anything else. Members means it can be equity and preference, it is debentures, again it is deposits, etc. And where should they maintain the record? So the register shall be compulsorily maintained at the company's RO, registered office, unless until they passed a special resolution in a general meeting with respect to they keeping the register at some other place other than the registered office. Sir, where can they keep? Yes, they can keep at any other place, but that place has to be in India, provided they pass a special resolution. When I say special resolution, more than or equal to 75% of the voting they have to get, they can keep at any other location within the same city, town, village as the registered office is there, or they can keep in any place, but that has to be in India, where at least 1/10 of the total registered members reside. Consider company issued some share, out of which, out of 100 shareholders, at least some 10 shareholders should be there in a place. In that place, they can place that register by passing special resolution in the general meeting. And the register of members shall what states that clearly record the holdings of each class of equity and preference shares, separately indicate the shareholding of members residing in India as well as those residing in outside India. Generally, we have two types of registers. One is principal register, we call it as main registered office register. One is foreign register, foreign members register, that is there. Then, what is the time period for entry? For example, I purchased a share today. I sold the share today. I purchased the debenture today. Somebody died. The share should go to the other party. What is the time limit for all those things? The time limit is within 7 days after approval by the board or its committee. It is always same. Whenever you want to make any change to the registers, it is 7 days for doing that. And some other additional requirements are there. This you can read it. And what should be the particulars in register? Mainly compliance with this thing. They should maintain in MGT1. MGT means Management and Administration 1. Sir, what does that register shall contain? Register shall contain all of your biodata entirely and holdings of all those things. Member's name, address, email, PAN, SIN. Why SIN? Because a company can also become a member of other companies, so corporate identity number and nationality. And guardian details for minor. See, first of all, you tell me, can a minor purchase a share? No, minor purchasing the share is not possible. But they can hold the share by way of devolution or by way of inheritance they can get from their parents. But that has to be the guardian's help. And when did they become the member? When did they cease to become the member? And what if the company is a guarantee company? What is the guarantee amount they have given? And any other interest they are having in the company. Interest does not mean buddy. Interest means I am having debentures also, I am having deposits also. Other interest in the company, that also has to be mentioned. And if there is any instructions by the member told that, see, I am residing in Mumbai, but I want you to send notice always to Bangalore address only. They give a notice instruction, that also has to be mentioned. This is important, particulars of the registers. Then, that is whatever I discussed, MGT1, that is for the shareholders register. Then comes debenture holders or other security holders register has to be maintained in MGT2, Management and Administration 2. And it is also same. Whenever there is a change in the member status due to death, insolvency, name change, that shall be updated in the respective registers. Every registers, and every register shall have something called as index of names. What is index? It is like the summary form. When it is applicable, it is an MCQ question. It is applicable only if the company number of members is not less than 50, then only it is applicable. See, every register shall have an index of names unless the number of members are less than 50. If the members are 50 and more, it is compulsory to be maintained. Exactly 50 is also there, because less than 50 they are talking about. Less than 50 is 49. 39 members are there, not required to be maintained at the index. Then if it is 50 or more, then definitely index is required to be maintained. So more than or equal to 50 members, compulsorily required to be maintained. Then you have to even maintain the register of beneficial owners. Or what is this beneficial owner? We will discuss it. The owner who is not registered in the register but is getting benefits out of it. For example, I have shares in my name, but I am telling the company pay directly dividend to my brother. That means I am the registered owner, he is the beneficial owner. The company also has to maintain that what is this? Beneficial owners register also. And authentication of entries. What is authentication of entries? Consider I purchased the shares. Company made an entry. That has to be authenticated. That means approved by somebody. Who can do it? Entries in the register shall be authenticated by company secretary or a person authenticated by board mentioning the date of the board resolution. Generally, it is company secretary only. And details of nomination. What is nomination details? If something happens to me, who should get all these shares? That nomination details has to be given. And penalty for non-compliance, I am not discussing the penalty, you go through that later, because some 100 penalties are there. Then comes a foreign register of members, or foreign register of debenture holders, or foreign register of other security holders. So whatever we discussed in the Indian part, the same thing is applicable for foreign. If the members are there in outside India, then they have to maintain that thing. A company with a share capital issued or debentures or security, if authorized by its articles, maintain a foreign register in a country outside India. This register records details of members, debenture holders, security holders, beneficial owners residing in that country. Simply whatever we just discussed, the same thing has to be there for even foreign register also. So filing obligations again same is there. Whenever you want to come maintain a foreign register, you should file a form MGT3 with ROC within 30 days of opening the foreign register stating its location. Sir, my foreign register is there. We opened it today, like last 1 week. It is there in USA, New York. That has to be mentioned within 30 days. If you change, if the register's situation changes or discontinued, again they have to file MGT3 within 30 days of such change. See, earlier it was there in New York, now it is transferred to Paris or somewhere it has been transferred. You have to file those things. I always tell that the communication to ROC from company always 30 days only. 99% it is 30 days criteria only it is there. Then status of foreign register. How do you treat the foreign register? Foreign register is also treated as part of principal register only. It is not a separate thing. Foreign register is considered as part of company's principal register of members, debenture holders and security holders. Now, what is the format and inspection? The foreign register shall be in the same format as there of the principal register. Format means the name, address, mobile number, same format. The foreign register shall be open for inspection and may be closed in any same way of principal register. The closure of register is there, 99 I think. We will discuss that, the closure of register also later. Then foreign register also should have nomination details and non-compliance is a rectification authority. If the foreign register maintained outside India, the decisions of the competent authority of that country is binding on any rectification. That means if you are register maintaining in USA, for example New York, if the New York Companies Act says something with respect to maintenance of register, that is also binding on that register. And whenever you want to make an entry in the foreign register, you have to do only after the approval of board of directors or authorized committee. Transmission and duplicate. The company shall transmit a copy of every entry in the foreign register to its registered office in India within 15 days of making entry. That means when I say principal register, that is main register that has been kept part of principal register. The similar way when they make an entry, they should transfer the same entry. Sir, we issued such shares to some party. Please make an entry in the principal register. They will make entry if you file within 15 days of making that entry. Again, a duplicate register regularly updated shall be kept at the registered office in India as part of the principal register. Why? Because what if something happens to that company, some war happens, if I can't bring the registers from outside India to India, at least I have a duplicate register, same copy paste, so that has to be maintained in India. The moment you make an entry in the principal foreign register, same entry has to be again made in the duplicate register also. Okay. Transactions related to securities in FR cannot be registered in any other registers during the continuance of such foreign registers. Discontinuance of foreign register, can they do it? Yes, they can do it. But the company may discontinue the foreign register at any time. When they discontinued, all the entries must be transferred to another foreign register maintained by the company outside India, or you bring everything and put it under principal register. Then section 89 we will discuss bit later. 90 also will discuss bit later. Come to 91. This is also important. Many times it is being asked. Power to close the register of members. What is power to close the register of members? See, why the register of members is being kept? Whenever there is a issue of shares, purchase of shares, or something is happening, they will make an entry. Now they want to close the register. That means they don't want to issue the share, sell the share. No entry is being made for those things. That is that period. Can they do that way? Yes, that is possible. But that power is given under section 91. The power is with the 2 points. Mainly, the company can close the register for a maximum period not exceeding 45 days in a financial year. Maximum period that they can close the register is 45 days, but that 45 days cannot close at a stretch. They can't close at a stretch. For example, I close today. Within 30 days, you should reopen that again. If you want another 15 days, you can close it at some other point of time. In one financial year, 45 days, and at one point of time, 30 days. So the register can be closed for a maximum period of 30 days at a time. At a time means at one time. And the total period of closure should not exceed 45 days in a financial year. For example, this month I closed. For example, consider tomorrow I am closing, April 1st. You can close. In the April to March financial year, you have total 45 days. But April, the moment you come to 30th April, you should definitely open it, because that becomes a longer gap for the members. So at one time 30 days, later remaining 15 days you can use it some other month or some other time, or you can use it as 10 10 10 15 or 15 15 15 3 times. It is up to you, but maximum 30 days at a time with a total gap of 45 days. And when you want to close before closing, at least 7 days notice has to be given to before closing the register. See, from next week I'm closing the register, that you have to give at least 7 days notice. So a company must provide at least 7 days prior notice when closing the register. If the company is listed, and it must publish the notice in 2 newspapers. One is in vernacular, and second one is in English newspaper. And the notice must be even published in the website of the company also. See, whenever the listed company comes, website also comes. You keep it in mind. Listed company comes, any notice given, website also comes. Unlisted company, it is not mandatory. However, private companies are exempt from publishing the notices in newspapers. However, they must issue a 7 days notice to their members before closing the register. Advertisement is not required. Penalty, read it later. Then comes annual return, that is also an important part, which I think we showed Tata Steel annual return, right, in the regular class. I think Tata Steel and one more company also we have seen that. What is annual return? See, as we file GST return, income tax return, regarding our total income of how much I earned from income, house property, salary, all those details we file it. Company also has to file every detail from the close of last financial year till the close of current financial year. Last financial year is closed on 31st March 25. Current it is closing on 31st March 26 now. Today is the last date. So from 1st April till 31st March 26, last year 31st March, how many directors are there? Now how many directors are there? How many shares were there at the end? Are there any issues in the current year? How many is the balance? How many shares were there? Is there any buyback? Is there any cancellation? Is there any increase? Is there any conversion of stock? What is the present balance? How many audit? Who is auditor? Who is auditor now? Did you remove any taken action on auditor? Is there any debenture? Is there any redemption of debenture? Every detail from 1 to A to Z, everything has to be given with respect to financial year, full financial year. That is called as annual return. There is one more concept called as annual report. Report is different from return. Return is for telling the compliance party everything was there, now it is not there. Report is like reporting the financial performance of the company and what is the future projects of the company. Performance of the company is being told by report. Compliance part is done by the returns part. Annual returns forms, they have to file it MGT 7 or MGT 7A. Sir, what is MGT 7A? For OPC and small company, MGT 7A. MGT 7A is like, see, when it's a OPC and small company, they are very, very tiny in nature. They don't want to do so much of compliance. That is why they are doing the small company or OPC. So we will give bit lesser provisions for filing the annual return. So MGT 7A is a summarized version. That means some 50% of the 7 is there. MGT 7 is the elaborated version of the normal companies. Every company compulsorily file annual return in the form MGT 7. Then what should be there in the content of annual return? The annual return must include where is the registered office, principal business activity, information about holding subsidiary and associate companies, shares, how many are there, how many issued, how many bought back, debentures, shareholding pattern, members and debenture holders with the changes. That means earlier A was there, now he died, B has become the member. Who is the promoter, director, KMP with changes. Meetings, what meetings? It can be of two types of meeting. One is board meeting, one is general meeting. Board meeting, how many has conducted, how many attended, how many not attended, what the resolution passed, is it yes, is it no, passed or not passed. Again general meeting, OR, SR, what is the business transacted, everything has to be there. Board members resolution meeting, board meeting, committee meeting, and attendance of the people. Remuneration paid to the directors as well as KMP, that details also has to be there. Penalty for punishment imposed on the company and its officers. If whatever we discussed, deposit not repaid or equity shares not issued at rightly, DVR is more than 74, there are so many penalties, right? If there is any penalty imposed on the company or officer, that has to be written here. Compliance certifications and disclosures, details on any share held by foreign institutional investors and any other prescribed matters, that has to be given. If you see, I'll just open that thing only for looking at this part. TCS and Tata Steel we have seen. I'll just show the TCS part. MGT 7, it is for company other than OPC and small company, because for them 7A is applicable. They are telling what is the SIN number, what is the PAN number, again what is the name of the company, registered office is there, email ID, details, contact details, website, what type of company, is it listed, if yes, what type of main subcategory is there. Again, recognized stock exchange, what are the stock exchange, BSE, NSE is there, what is the SIN number, Name of the register and transfer agent, MUFG in time India, something it is there. Annual AGM conducted, yes. What is the date? 31/8/2025. Financial year from 1/4/24 to 31/3/25. Sir, what is the current year? MGT7? No, it is not completed. Today it is going to complete and they will be filed after some time. Did they get any extension for AGM? No, they did not get. Then what is the principal business activity? Information and communication, TCS thing. Again, what are these holding subsidiary companies? They have given the details of holding and subsidiary, everything. And they have to give what is the share capital, debenture capital, securities of the company, along with the changes also. See, authorized capital, issued capital, subscribed capital, paid up capital, same things are there. We will check number of shares at the beginning of the year. Is there any increase by way of public issue, IPO, FPO, OFS, rights issue, bonus issue, private placement? No, they did not do anything in the current year. Is there any ESOP? No. Is there any security shares, preference shares conversion, debenture conversion, GDR, ADR, everything is there. Is there any decrease in the current year? No, there is a demat form that is being decreased. Preference shares, they don't have the preference shares only. Again, debenture, sorry, ISIN of equity shares, that is not there. Then debenture transfer, since there is no debentures only, because of which there is no transfer. So total turnover of the company 2 lakh, I think 21 lakh crores, and net worth of the company is also there. What is the shareholding pattern? Individuals, Indian, NRI, foreign nationals, central government, everything. Can you should give even FII also, foreign institutional investors, body corporate, promoters also you should give. This is for public or other than promoters. This is for promoters. Then you should give the salary details also. Composition of board of directors is there. Okay. How many people are holding how many shares? That is being given here. How many meetings conducted? Number of meetings held? 1. This is general meeting. So and so date it is being held. Number of meetings, that is board meetings. They conducted so many board meetings, 5. Committee meetings also they conducted. And attendance of directors for every which meeting, how many people are attended. Then penalty and punishment details, that is not there because it is not being punished. And they signed it. Declaration, sign it, and that's over. Attachment, some files. That's over. Here they have given shareholders depend, something is given, not required. It is 140 page. I'm not going through that. This is about annual return, and every annual return has to be signed by a director and a company secretary. That means director plus company secretary, or by company secretary in practice if no CS. If you don't have any CS employee by yourself, then go outsider and get it signed. For OPC and small company, you only company secretary signed or practicing company secretary signed, that is sorry, director, or if there is no company secretary, director can sign it. Certification, it is there. It can be an 3 marks question or an MCQ point also. See, if you are a company, who are having a company secretary, yes, you have to sign director and company secretary, I agree. Along with that, if you are falling under any of this criteria, either you are a listed company or you are unlisted company with paid up share capital 10 CR or turnover of 50 CR or more, then you should get one certificate from company secretary in practice, CSIP. Normal company secretary employee is certified. Again, after that also company secretary in practice, you should get a certificate stating that MGT8. Whatever it is being disclosed here, that is properly there. Only for listed companies and companies which are the paid up capital 10 CR and more, and turnover is 50 CR and more. If you see here, Tata Consultancy Service also has it. I'll check. MGT8 will be there, I feel. I'll directly search it. Hmm? That's it. Let me open one more Tata Steel. I think it was there in that. This is MGT7 till, okay, it is not updated fully because everything is blank. It is not yet signed. But if you look at this part, MGT7, everything attachment is there. Everything is signed by DSC, digital signature. Below that, if you see, form number MGT8 is there. It is Tata Steel Company. So it is what certificate by company secretary in practice. Compulsorily has to be taken if you are a company listed or any of the criteria. And whatever the annual return is there, that has to be kept placed on website of the company. And whenever you file that annual return and board report, in the board report also, you should give the web link of that website of the company. If you click on this link, you will go to the annual return of the company. That they'll take there. So when should you file that? You should file that annual return with ROC within 60 days from the date of AGM. The annual return is for 60 days. It is an MCQ point again. If no AGM is held, then 60 days from the date when the AGM should have been held. AGM should have been held within 6 months from the end of financial year. That also has to be done. From the due date of holding AGM, again you have to tell the reason why AGM is not held. Sir, COVID is there or something, you have to tell. Penalty is there, you can go through. Then, sir, where can we keep the registers? Registers, everything has to be kept at where? Registered office of the company. Sir, can I keep outside registered office? Yes, provided special resolution passed, at least 1/10 of the members has to reside. Can I keep it outside India? No, keeping registers outside India is not possible. Only foreign registers can be kept outside India. So location requirements, registered 88 and 92 shall be kept at the registered office of the company only. And you can keep it in some other location, but in India, if approved by SR and more than 1/10 of the members reside their place. And inspection rights. What is this inspection rights? Whenever somebody want to inspect whether my name is there in the register or not, whether what is the person, everything is there, then he can come and inspect. And it is the duty of the company to make the registers available for the purpose of inspection of those people. When registers, and it is not indices, it is indexes, must be open for inspection during the business hours. Sir, what is business hours? 9 a.m. to 6 p.m. during this time, but not the entire period, at least for 2 hours on every working day. Register should be open for inspection on every business day, every working day during the business hours for at least 2 hours in that day. If you are a member or debenture holder or other security holder, you can come and do it at free of cost. Other person, you may pay some nominal fee, but company can decide that, but not exceeding 50 rupees for inspection, and come and inspect the inspection. And somebody want to take the extract and copies, xeroxes and all those things, then he can take, members, debenture holders, security holders, they can take without any fee. Or copies on payment of 10 rupees per page. Maximum is 10 rupees. And the moment I tell I want a page of this, take this 10 rupees. The moment I pay 10 rupees, within 7 days after payment, they should send me that copy. Extracts or copies. And details of such address, email ID, unique ID and PAN will not be available for inspection of copies. That means when I go for register of members inspection, I can't, because my Bajumane or this neighbor girl is also shareholder in that company. I also want to be because I like her, because of which I become the member. Later I'm going to the company for inspection, I'm asking, give me your mobile number, give me your email ID. No, you can't do that. They are personal credentials. So that will not be available for inspection of or taking the copies out of it. And whenever you maintain a register, do you need to preserve the register, or after the year you just dispose it? Preserve it for how many period? How much period? If it is with respect to members, it is permanent. Debenture holders 8 years. So register of members. When I say members, it can be Indian members, it can be foreign members. Doesn't matter. Register of members preserved permanently in the custody of company secretary. Debenture holder or other company securities 8 years from the redemption date. Copies of documents filed with ROC. So for example, MOA, AOA, or some other documents you file, generally those incorporation document, that is what is this? Permanently. Other documents are notices 8 years. Foreign register also permanently for members if unless until it is discontinued and transferred to some other party. Members permanent, debenture other security 8 years. If you do the refusal, then you take care of that penalty. Then comes meeting part. Yes, what happened? Nothing. Is it speed? And you go some other place and sit. ನಿನ್ ಜೀವನದಾಗ ಆರಾಮ್ ಇರ್ಬೇಕಂದ್ರೆ ಹೆಣ್ಮಕ್ಳ ತಂಟೆಗೆ ಹೋಗ್ಬೇಡ. ಅವ್ರ ಫ್ಯಾನ್ ಬೇಡ ಅಂದ್ರು ನೀನೇ ಒಂದ್ ಸ್ವಲ್ಪ ಎಕ್ಸ್ಟ್ರಾ ಫೆಸಿಲಿಟೀಸ್ ಕೊಟ್ಟು ನೀ ಆರಾಮ್ ಇರ್ಬೇಕಷ್ಟೇ. ಉಪವಾಸ ಮಾಡೋ ಟೈಮ್ನಾಗ ಉಪವಾಸ ಮಾಡ್ಬೇಕು. ಎಲ್ಲ ತಿಂದ ಅಡ್ಡಾಡಿದ್ರೆ ಏನ್ ಮಾಡೋದು ಮತ್ತೆ? You want chocolate? I have dark chocolate. Really, I have it. If you want, I'll give. ಅದು ಒಂದ್ ಬೈಟ್ ತಗೊಂಡು ವಾಪಸ್ ಕೊಡ್ಬೇಕಷ್ಟೇ. ಅಂದ್ರೆ ಮುರ್ಕೊಂಡು ಬೈಟ್ ಅಂದ್ರೆ ಹಿಂಗ ಅದು ಡೈರಿ ಮಿಲ್ಕ್ ಆಡಲ್ಲ. ಅಲ್ಲ ತಗೋ ತಗೋ. ಕ್ಲಾಸ್ ಆದ್ಮೇಲೆ ನೀನ್ ತಿಂದ್ರು ಒಂದೇ, ತಿಂದಿಲ್ಲ ಅಂದ್ರು ಒಂದೇ. ಬಟ್ ಶುಗರ್ ಫ್ರೀ ಅದು. ನೀನ್ ಸ್ವೀಟ್ ಇದೆ ಅಂತ ನಂಗೆ ಗೊತ್ತು, ಅದಕ್ಕೆ ಶುಗರ್. ಹಾ ಇಲ್ಲೋ, ನಾ ಏನು ಪರ್ಚೇಸ್ ಮಾಡಕ್ ನಾ ಏನು ವರ್ತ ಇಲ್ಲ, ಎಲ್ಲ ನಂಗೆ ಗಿಫ್ಟೇ ಬರ್ಬೇಕು ನಂಗಾದ್ರೆ. ಈ ಕಡೆ ಸೈಡ್ ಕಿತ್ತ. ಒಂದ್ಸರಿ ಎಕ್ಸ್ಪೈರಿ ಡೇಟ್ ನೋಡ್ಬಿಡು. ಅಲ್ಲ, ಎಕ್ಸ್ಪೈರ್ ಆಗಿಲ್ಲ, ಬಟ್ ಇಲ್ಲ 100% ಆಗಿಲ್ಲ. ಸೊ ಡಬಲ್ ಕನ್ಫರ್ಮೇಶನ್ ಹಿಂಗ್ ಮಾಡ್ತಾ ಇರ್ತೇನೆ ನಾನು, ಏನೂ ಆಗಬಾರ್ದು ಅಂತೇಳಿ. ಮತ್ತೇನಾದ್ರೂ ಆಗಿ ಇವತ್ತೇ ನನ್ನ ಲಾಸ್ಟ್ ಟೀಚಿಂಗ್ ಆದ್ರೆ ಏನ್ ಮಾಡೋದು? ಸರ್ ಬನ್ನಿ, ಅಲ್ಲಿ ಒಳಗಡೆ ಪಾಪಿಗಳಿದಾರ, ಅಲ್ಲಿ ಟೀಚ್ ಮಾಡಿ ಅಂತೇಳಿ. ಯು ಕ್ಯಾನ್ ಗಿವ್ ಇಟ್ ಟು ಎವ್ರಿಬಡಿ. ಅಷ್ಟು ತಿನ್ನಕ್ಕಾಗಲ್ಲ. ಅಲ್ಲ, ಯು ಕಾಂಟ್ ಈಟ್ ಇಟ್. ನಂಗೆ ಬೇಡ, ನೀವು ತಿನ್ರಿ. ನಾವೇ ಪಾಠ ಮಾಡ್ಬೇಕು, ನಾವೇ ಚಾಕ್ಲೇಟ್ ಕೊಡ್ಬೇಕು, ನಾವೇ ನೋಡ್ಕೋಬೇಕು ನಿಮ್ನೆಲ್ಲ ಒಂಥರ. ಥ್ಯಾಂಕ್ ಯು ಬಿಟ್ಟು ಏನು ಸಿಗಲ್ಲ ನಮ್ಗೆ ವಾಪಸ್. ಹ್ಮ್. See, then again, coming back to the notice, whenever the company want to conduct a meeting, company has to compulsorily give a notice for the meeting, calling the meeting. So there are some rules for the calling for meeting. Sir, what are those rules? Whenever the meeting is being held, from the date of meeting, at least you should give 21 days before notice from the date of meeting. When I say 21 days, I'm talking about 21 clear days. I'm not talking about just 21 days. I'm talking about 21 clear days. Sir, what is 21 clear days? It is excluding, it is after excluding date of meeting and date of notice. If you send notice today, you don't consider under 21 days. You don't consider date of meeting also. You excluding that and that. If there is 21 days gap in between, that is called as a valid notice has been sent. But if you are sending the notice by way of a post or physical mode, then the notice has to be the time limit has to be considered for the purpose of date of meeting excluded, date of notice excluded, plus 48 hours for transportation also has to be excluded. That means 2 days for sending the notice and date of meeting, and 2 days for transportation. Totally, if it is by physical mode, 25 full days or 21 clear days. If it is other than physical mode, 21 clear days or 23 full days. So in the examination, write it as 21 clear days. And to whom it has to be sent? It has to be sent to everybody. Whoever is eligible to receive that notice has to receive. You have to send that. 21 clear days notice is required for general meeting, excluding the date of sending and date of meeting. And notice must be given via writing, electronic mode or prescribed mode. To whom? To the all the members, legal representative of deceased member, assignees of insolvent member, and auditors and directors. To every person you have to give the notice. But in case of an IFSC company, section 101 applies unless until article tells that it is not applicable. And section 8 companies, general meeting, whatever we told 21 clear days, you just replace the 21 days with 14 days. So general meetings can be called with 14 days notice. Exceptions apply in case of company has no defaults in filing the 137 and 92. No, I think it is not 137. What is 137? What is 134? Board report. Okay. I think in multiple places I told 134 section and 92 section. It is 137 and 92. Not 134. You can change that later. Then accidental omission. What is this accidental omission? There are 1,000 members. By mistakenly, one member's notice has not been sent. Accidentally, it has skipped it out. Can that person come and tell in the meeting that so whatever the meeting conducted, it is invalid? I was not there. No. In case of general meeting, it is he cannot come and invalidate the meeting. In case of general meeting, provided it is accidental, not purposeful. But in case of board meeting, even accidental omission also the director can come and invalidate the meeting, because a company can have maximum of 15 directors. If you can't directly give it for 15 directors, then how you can do it? Purposefully, what happens is, when you know there is a director who is going against your decision, then you try to not to give the notice for them. That is not considered as. So omission or non-receipt of notice does not invalidate the meeting. The company must prove the omission was accidental. Company has to tell that, see, it sent it, but because of the internet connection or mail company, it has not been sent. But if there is anything which is beyond the company's control, because of which the other party did not receive the notice, then also company is not liable and he cannot invalidate the meeting also. Sir, can I send less than 21 days notice or less than 14 days notice? Yes, it is available. A general meeting can be called after giving a shorter notice with the consent of dash members in a writing. They tell that if it is an AGM you are calling, not AGM, everywhere it is there, at least 95% of members entitled to vote. When I say 95% of the members, it is number of members I am talking. Number of members. Other than AGM, now that means AGM, for companies with a share capital, majority of members. That means majority of the members holding at least 95% of the paid up share capital that gives the right to vote at the meeting. That means consider 100 members are there. And I am calling EGM, other than AGM is EGM. I should give notice at least to 51 members. And those 51 members should hold at least 95% of the capital of the company. Sir, I give 90 members notice, but every 90%, 90 people put together, they hold only 10% of the company. Then it is not a valid notice. Number also satisfied and capital requirement also has to be satisfied. Here both the conditions are there. If it is other than AGM, companies without share capital, members having at least 95% of the total voting power. It is 95% only. Only in case of other than AGM, for companies with share capital, here it is without share capital, here it is with share capital. The difference here is voting power. Here it is share capital, paid up share capital. If a company has a share capital, 95% of the capital. If the company does not have share capital, 95% of the voting power. The member has voting rights only on the specified resolutions. They will be counted only for those resolutions which they are entitled to vote. Resolutions means, consider company want to discuss 10 businesses, out of which I am ineligible to be part of 3 businesses. Then my vote will not be considered for those 3 businesses. And what should be there at the notice? Mainly the notice should consist of 4-5 points. One is the day of the meeting, date of the meeting, time of the meeting, place of the meeting, and what is the business agenda. A meeting is going to be held on a Friday, that is the 10th of April at 11 o'clock in Malleshwaram, some AB building, and we are going to discuss appointment of director, appointment of auditor, some other businesses that has to be discussed. Everything, at least these things has to be given. Rest you can go through it. Then authority to call general meeting. Who can call the general meeting? Generally, anybody can call with the board approval. AGM can be called, EGM can be called. Sir, individual directors cannot call the general meeting unless ratified by the board. That means unless until it is ratified means subsequent approval. Unless it is approved, you can't call the general meeting. Sir, how can you send the notice to the members? You can send the notice via email also. Either the text attachment or link. That means whenever you send a notice in the email, either you can directly type the content and send that, or you prepare a PDF and attach that PDF to the mail and send that, or in the mail you send, put a link of something where the notice is available. In three ways it is possible. Generally in India, either it is text or attachment. 90% it is attachment only. And subject line should include what? Company name, meeting type, date, place, etc. If I show my mail, I think I have received some mails already. General meeting, right? Where is the search bar here? It is a subject line where you are saying this e-voting for Ola Electric equity shares will be open from 31/26 to 9 a.m. to 28 to 26 5 p.m. and meeting is on. That is still not applicable. Not they did not tell. CDSL they have given the details everything. How do you log in everything? But if you see here, I think they have given an attachment. No, they did not give the attachment. Don't have regarding that. Let me see here. I think something is missing in the mail. Login is there. Okay. Here it is there. Notice. Notice of meeting of the equity shareholders of Suzlon Limited. If you see here, subject line they have written. They have sent a PDF. I was already on a PDF. If it is 197, that is Paytm. Vodafone ID also, I think. No, these are some other communications, not the notice part. Geo Financial Service, they also sent a notice by this. So this is called as notice. If you see here, it should at least contain what? Company name, everything. Second AGM to be held on Thursday, August 28, 2025. Time is 2 p.m. and on video conferencing mode, it is being held. So it should contain company name, meeting type, date, and place, everything. And notice shall also be placed on the company's website, and if there is any government website, that is to be notified. Email shall be sent via secure programs maintaining transmission records. That means that email should not be hacked and change anything. Email failure beyond the company's control absolves the liability. What is absolves? Absolve means relieve. The email shall be sent to the person entitled to receive it as per the company's records provided to the depositor. That means you can't send it to his family members. The person who is entitled to receive, they should receive it. The company must also give members an opportunity of at least once in financial year to change their email ID. I am not asking everybody has to change. You have an option to change. If you want, you can update it. When you are sending general meeting notice via post, it will be considered as served 48 hours after the letter is been posted. That means you excluded 48 hours for that also. That is for 101 notice part. Then comes 102, that is the explanatory statement part. The explanatory statement is not applicable for all the companies. Explanatory statement is applicable only for few companies. So whenever company is discussing a special business, there are two types of business. I think we will discuss it further. If it is not, we will anyway discuss that. There are special business and ordinary business. What is ordinary business? As we know that adda points at AGM is ordinary business, and other than adda points at AGM, everything is a special businesses. Whenever you are required to do a special business in a general meeting, then the explanatory statement must include the nature of concerns or interest of directors and managers, KMP and their relatives, other information to help members understand the meaning, scope, and implications of the businesses. If you are doing ordinary business, only at AGMs, uh, they gave it because AI, if I use mnemonic, they only told at AGM. I gave this at AGM, they added the word mnemonic. So at AGM is what? One is adoption of accounts, declaration of dividend, adoption of appointment of directors, and appointment of auditors at the points. If you do all these 4 points at the AGM, then only it is ordinary business. If you do any business other than these 4 in the AGM only, that is called as special business. If you do any business in EGM, maybe adda or other than adda at EGM, that is fully special business. For ordinary business, explanatory statement is not required. What is special business? Any other business at AGM, and all business at AGM is special business. That's it. This remaining part, you can go through that. Then comes quorum of the meeting. Sir, what is this quorum? Quorum is minimum number of members who are required for the purpose of conducting a valid meeting. When I say minimum number of members which are required to conduct a valid meeting, it is not just physical present. It can be physical also. It can be if the meeting is conducted virtually, electronically, then physical presence is not required. Virtual presence is also okay. So quorum requirement is unless until AOA provides for larger number. See, if the AOA want, AOA can provide for larger number, but lesser number is not allowed. Whatever I'm discussing for a public company first. I'm discussing for a public company. If you are a public company and you are having the total number of members up to 1000, then at least 5 members should be personally present in the meeting. When I say personally present, proxies we don't count it. Members should be there either physically or electronically. No, sir, my company members are more than 1000 but up to 5000. Then it is multiplied by 3. That is 15. 5, 15. No, sir, more than 5000. Then multiplied by 2. That is 30. So 5, 15, 30 is the quorum which is required for a public company. No, sir, I'm a private company. Then 2 members are sufficient. You can do the thing with the 2 members only. If the AOA tells, sir, for our company members are 560, AOA is telling we need 30 members to do the quorum. Yes, that is valid. If the AOA tells we need only 2 members to do the quorum for public company, that is not valid. Because up to 1000, even if you are only 5 members there, then only 5 members can also, public company minimum 7 members has to be there. Only 5 members personal present is also sufficient for the purpose of conducting a meeting. Then whenever the quorum, I tell quorum is required for conducting of meeting, if the quorum is not present within first half an hour of the meeting, consider every place the meeting time is fixed. For example, here they conducted remote e-voting facility of AGM will end at 5 p.m. But here they are not given. I think it is just a notice. They didn't give the entire thing. Not 1:30. Consider it as 2 o'clock. Yes, 2 o'clock only. Attend the second AGM of the company. Here it is there. August 28, 2025, 2 p.m. Through video conferencing mode. When they tell that it is 2 p.m., if the quorum, required quorum, 5, 15, 30 in case of public company or 2 in case of private company, if it is not present within first half an hour of the meeting, 2:30, then meeting will be adjourned. Adjourned means what? Will be postponed. There's a difference between postponement and adjournment. When the meeting is already started for the first half an hour, if the quorum is not present, then you are putting it another day. That means something which has already started, if you are putting on the other day, that is called as adjournment. But you are putting on another date which is not started. For example, exam is there on 3rd of April. Today only they are telling exam is postponed to the 5th of April. That means before it is starting, if you put it on another day, that is called as postponement. And during the time when it is happening, it is called as adjournment. If you look at the court is adjourned for 10 minutes. That means because court is already running for 10 minutes, we are taking a break. They never tell that court is postponed. So in that case, if it is because of the quorum, then meeting will be adjourned to the same day, same place, same time next week. Third, it is Thursday, August 28, 2025, 2 p.m. Then Thursday, whatever the date comes, that date, next week at 2 p.m. same time. Unless until company want to change it expressly. But when the company want to change that meeting duration, time, anything, venue, then they have to give at least 3 days notice for that, for a quorum. So if the quorum is not present within 30 minutes of the scheduled time, meeting shall be adjourned to the same day, time, same place to the next week, or as determined by the board. And if it is a meeting which is not called by the company, generally what happens is company will call the meeting. We want to conduct a AGM or EGM. But there is a meeting which can be called by requisitionist. We call it as 1% of the paid up capital, total paid capital, or 5 lakh rupees of paid up capital, whichever is lower, they can make an application to company. Some is there. We will discuss in 100. If they call and quorum is not present within 30 minutes, then that is not adjourned, that is cancelled immediately. It is an MCQ point. I have seen this MCQ, some question paper. If the meeting is called by the requisitionist and quorum is not present, then meeting will stand. Adjourned, cancelled, postponed, or all of the above, none of the above, something they have again. It is cancelled. If there is any change in date, time, place, etc. of adjourned meeting, then company must provide at least 3 days notice to such members only for change of the adjourned meeting. This can be done individually or by publishing an advertisement in the newspaper in one English and local language, that is citing the area where company's registered office is located. If the quorum is still not present in the adjourned meeting also, consider my members are 500. That means 5 members are required. When I say 5 members, first time 3 members came. Adjournment happened. Second time also 3 members came. Then don't care. Consider that quorum is present with 3 members only. Do the meeting. But at least 2 members has to become. Because meeting can't be done like Nityananda, me talking to me. That is not going to happen. So members present shall form the quorum. Whoever is present, that will be quorum. Then this is section 1112 and 113, 112 and 113, 112 and 113 is simple. In many cases, government is holding the shares of a company. In many cases, one company is holding shares in other company. In that case, both people we can't go there because they are having some other work to do. So that is why they appoint some representatives to go to the meeting and represent the government or corporations. That is what 112 and 113. They are telling SS is there. What is SS? Secretarial standard. As we have accounting standard, company secretary has secretarial standard too. SS2 tells that quorum not required only at the time of starting of the meeting. Quorum is required. Consider you want to discuss 10 matters. All the 10 matters discussion time only quorum is required. First matter discussed, okay, check quorum is there or not. Second matter discussed, quorum is there or not, check. Again third matter discussed, quorum is there or not, check. If this checking will not happen unless until somebody questions, is the quorum there or not in the meeting? the chairman of the meeting will consider that test quorum is there and they'll continue the meeting. And related party definition, I kept it purposefully. If you want, you can go through that. That is quorum related part. Go through it once. Any doubt? Tell me. No doubt. Then we will discuss the chairman of the meeting, not the company. Company chairman is different. Yes, chairman can be meeting chairman also. If the AOI tells that for all the meetings of the company, chairman of the company will only be the chairman of the meeting, that's okay, no problem. But unless until nothing is there, then chairman of the meeting is elected by the members present within the members present in that meeting. Some consider these are the members. You told, sir, you become the chairman. Yes, I'll become the chairman. You start the meeting. How we elect? Generally, we elect by way of show of hands. Unless until somebody demands the election of chairman by way of the poll. No, sir. I think there is some partiality is there. I'm holding 1 lakh shares. Everybody is holding only one share. I don't think it is a fair manner of deciding who should be the chairman. Then okay, you can demand the poll. Then in the poll we will vote everything. Then you can decide who can be the chairman. So the same thing. Unless until anybody demands the poll, the chairman of the meeting shall be elected by way of show of hands. Once the chairman is demanded by way of poll, the chairman who is elected earlier by way of show of hands will be chairman for whatever the business already discussed. The moment poll chairman is elected, the earlier chairman comes down and the new chairman will take the part of the chairman and continue the remaining business to be discussed. And what is the purpose of appointing the chairman? He should ensure that it is not like our assemblies, state assembly or anywhere like fish market. He will ensure that proper discussion of the matters being happening there. No vulgarity is being done, no abusing of any party, no defamatory statement. Everything conducted transparently and everything. That is the main duty of the chairman. And chairman will have a vote if it is provided by AOA. And chairman will have a special vote also whenever they tell that in case of equality of those things. So generally, chairman is elected by way of show of hands. Who are members personally present shall elect a chairman by show of hands, unless article state otherwise. If the article tells that somebody is already a chairman, then follow that as chairman. If article does not tell that, then you appoint the chairman by way of show of hands. If somebody poll is demanded, the chairman elected by show of hands remains in position until another person is elected by a poll. Unless until the new person comes, he'll be in the chairman position, then you get out of the chairman. Then what does chairman do? Chairman will manage the meetings, maintain the decorum, ensure the proper conduct of meeting, and execute the minutes of post meeting. Once the meeting is conducted, company has to compulsorily execute a minute. That is summary of the meeting which is conducted. That is the duty of the chairman. He has the authority to decide all questions arising during the meeting with strict impartiality. He should not do any partiality. Consider any question somebody is asked. He felt it is not required or it is defamatory to somebody. He can reject that question. No need to answer that. He has all those rights. And with respect to voting of the chairman, chairman has a casting vote in board and general meetings if the company's AOA specifically allows it. That has to allow it. A casting vote means if there is any equality of the vote on any matter, the chairman can cast a second vote to break the deadlock. Generally, AOA gives you the right to vote. If after your vote also there is a equality, then you vote one more time, pass the deadlock. If the AOA do not provide for the casting vote and OR on the ordinary resolution on which there is an equality of votes is deemed to be dropped. No, it is not ordinary, it is OR. If the AOA do not provide for casting vote or on which there is an equality votes is deemed to be dropped. That means that is not passed only. It is 50-50 gone. Deadlock has happened. If the AOA does not provide it. This is okay. Then comes 105 proxy. What is proxy? When a member can't attend the meeting personally, then he can send somebody else in his place to attend the meeting for the purpose of having the breakfast and tea and dinner and lunch and biscuit also, and he can go home and tell whatever it is happened in the meeting. So proxy is a person who is appointed on behalf of the member, and appointment is validly allowed under section 105. Whenever somebody appoints other party as a proxy to represent himself in a meeting, the member has to submit that proxy form with the company at least 48 hours before the date of time of meeting. If it is 2 p.m. in today, 48 hours take it, before that he has to submit. And if a member is appointed multiple proxies, the proxy who is appointed on a latest time, for example, you appointed somebody 3 days back, 2 days back, and 4 days back. Now, latest who is there, who will become the proxy and will continue to be the proxy on behalf of the member. Then once the proxy is appointed, proxy will never get any right to vote. He will never get any speak on any matter, nothing. But he has only voting right only if the voting is conducted by way of poll. Only on the poll he can vote. Except else, not possible. When I say proxy, consider Shashi appointed me as a proxy. Can Suraj also appoint me as a proxy? Yes, that is possible. A single person can act as a proxy for maximum of 50 persons. Provided he is not acting as proxy for more than 10% of the voting power members. A single person is holding 5%, 1%. That means total put together it is more than 10%. Stop it. Even though 50 members are allowed. Sir, everybody is holding only 0.00001. Okay, maximum 50 members are there. Both conditions has to be satisfied. Sir, a single member is only holding 10%. That's okay. You are proxy for only 1%. Sir, single member is holding 20%. Then yes, still he can appoint one proxy. That is possible. But he can never be proxy for some other member. When you are appointed as a proxy for one member, then any percentage of voting is there, okay. You can't go for second proxy. And there is one more point which that once asked in the examination, I saw either in MTP or here, I don't know exactly. Proxy is not required to vote or cast his votes, mainly in poll I'm talking, or member generally not required to cast his votes, entire votes in the similar manner. For example, 10 business they want to discuss. One business he told yes for all the votes. 100 votes yes, 100 votes yes. Second business he felt no, I don't like this. Yes, 100 votes no, you can do that also. Second business. Third business he felt okay, I'm convinced only 60-70%. Then he can vote out of 100, 60 votes for yes, 40 votes for no. That is possibility is there. Anything can be done with respect to voting. So proxy appointment rights. Member entitled to attend and vote at a meeting can appoint another person as proxy to act as their behalf. Proxy shall not have a right to speak at the meeting. Proxy can vote only on a poll. Other voting is not allowed at all. So appointment of proxies do not apply to companies without share capital unless AOA states otherwise. That means when you don't have any share capital, no need to appoint. If you want to appoint somebody, you can appoint. Central government can prescribe companies whose members cannot appoint proxies. For example, central government related companies, they have things they can't appoint. Section 8 company can appoint a proxy who is also a member of a company. That is important. Consider I'm a non-government company, Reliance company member. I appointed, consider Ramya as my proxy. She is not the member only, so I can appoint non-government company. But if it is Section 8 company, unless until she is also a member of that Section 8 company, I am also a member of Section 8 company, then I can appoint her as a my proxy. If she is not the member, then I can't appoint her as a proxy as Section 8 company. That is there only for Section 8 company. An MCQ point. Sir, how much limits is there for proxy? A proxy can represent up to 50 members and hold a maximum of 10% of voting share capital. If the members holding more than 10% of total share capital carrying voting rights, they can appoint one proxy, but that proxy cannot act as proxy for others. Then there is a proxy instrument, that is MGT 11. Proxy instrument shall be signed by the appointer and their authorized attorney. For corporate members, it should be under the common seal or signed by a officer or director. Then AOA cannot impose additional requirements for executing proxies. Disclosure in the meeting notice. Every notice calling the meeting of a company with the share capital has to tell that a member who has a right to attend the meeting has a right to appoint one or more proxies also on behalf of him. The notice should Clearly tell that, yes, if you can't come to the meeting, yes, you have a right to appoint somebody else and send it to the meeting. Notice shall also mention that a proxy need not be a member of the company also, unless until it is a Section 8 company notice. If there is any contravention, there is some penalty. And what is the validity of proxy? Proxy submitted 48 hours before the meeting are valid even if AOA requires a longer notice period, because the law tells that the law has a right to override MOA and AOA. Law only gives the 48 hours time. AOA cannot override and give some other point of time of more than 48 hours. Even if it gives, that does not have any value. Then inspection of proxies. Any party who want to know that who is acting proxy for which party, you can give a notice to the company and you can inspect when, consider 2 p.m. 28th of August 26 is the meeting. Sorry, 25 is the meeting. Then if it is the day, time and date of the meeting, 24 hours before the meeting, that means 27, 8, 25, 2 p.m. You can start inspection from this time, and you can continue. You can continue uh, until meeting is concluded. So every member with voting rights can inspect the lodged proxies during the business hours, only business hours, starting 24 hours before commencement of the meeting until it concludes. Until it concludes. And they must give at least 3 days written notice to their intention to inspect. See, I want to see, at least 3 days notice has to be given. Then again some penalty is there. That is with respect to 105. You please go through it. We'll take a small break. I like to Thank you. So the next concept is restrictions on voting rights. Now consider some shareholders are already having the shares of a company. Can a company restrict the voting rights of the members? It is against the rights of the members. It is not possible to be restricted. So if the company want to restrict, it can restrict only under two circumstances. Other than two circumstances, restrictions is not possible at all. This is also an examination question which is asked once. An AOA may restrict the member from exercising voting rights if any amount due from the member on call or other sums payable to the company and company has exercised a right of lien over the shares only under these two cases. First one is amount due from the member on call. So that means company made the call but person did not pay the money. Then you can't exercise the voting right. Second one is company exercise the lien on your rights because you might have done some other activities because of which they might have kept it. Company cannot prohibit voting rights on any grounds other than those mentioned in above. So, sir, company, I purchased some 100 shares of 10 each, 5 rupees paid up. Company also did not make one more call. I did not pay the money. Is it also, can they restrict the voting rights? No, not possible. Only when the company made the call, I did not pay the money. Company did not made the call, I did not pay the money, that's okay, no problem at all. Then, partial use of votes. What is partial use of votes? In a poll, at a meeting, a member with more than one vote does not have to use all the votes or cast all the votes in the same way. They can vote 60 votes in the yes and 40 votes in the no. It is up to him. And restrictions on signing requisition. A member who is restricted from voting cannot sign a requisition for an EGM. Section 100. What is requisition? Generally, every general meeting is called by company. But if when the member want to call the meeting, we call it as meeting called by requisitionist, EGM called by requisitionist. And for that, at least 1% of the paid up capital or 5 lakh rupees worth of face value of the shares who are held, they can sign it, give it to the company will call that meeting. The people who don't have any voting rights on resolutions, then they can't sign that and be part of that 5 lakh rupees or 1% of the voting power. And where AOA has no provisions with respect to restricting the votes, then a member cannot be prevented from voting even if the calls or sums are unpaid or the company has lien over the shares. It is provided it can be restricted only when there is a provision in AOA. If there is no provision in AOA, then there is no restriction. If the shares are forfeited and reallotted, then the new allotee cannot vote until all calls on the shares are paid. That means it is like fully paid up shares. Forfeited and reallocated shares has to be fully paid up to exercise the voting rights. Then voting by joint shareholders. What do you mean by voting by joint shareholders? When husband and wife or any two persons are holding any shares, then who will vote on that? It depends on seniority of the person. Sir, what do you mean by the seniority? Is it the age? No, it is on the name of the member which is entered in the register of the members. If the first name, which party's name entered in the first, will get a right to vote and right to receive the dividend, everything. So must agree on a voting unless AOA provides for otherwise. Voting order is based on the order of names in the register of shareholders with seniority determining the voting rights. Voting by directors like shareholders, like any other common shareholder also, they'll vote it. So preference shareholders can only vote on the resolutions related to their rights. So remember two rights we discussed. One is variation in terms of rights. Second one is if the dividend is not paid for 2 years, then only they can vote. If not, they can't vote. Then modes of voting, there are 4 modes of voting. One is show of hands. Electronic means the demand for poll and postal ballot. So voting by show of hands, that means sir, how many of you say yes, raise your hands. How many of you say no, raise your hand. That's over. So default voting method, if no method is being specified in the meeting or notice anywhere, it is default. Any time it is only done. Voting is usually done by show of hands unless voting is demanded by poll or electronic means. The chairman's declaration in the minutes book is conclusive evidence that the resolution has been passed. That means the moment minutes is entered or completed by the chairman, it is as good as resolution has been passed by that party. And insolvent shareholders voting rights. Can an insolvent person also vote in the meeting? Huh? That means you are trying to restrict the vote of a person. When can you restrict a voting person? Only under two situations. Lien and calls are not paid. Where did you tell insolvent person is restricted from voting? Just now we discussed. No, see, in representative what? He is the died. Insolvent means he does not have the money. That's it. An insolvent holder can still vote on the show of hands if he remains in the company's register as members even if he has no beneficial interest in the shares or the dividends are paid to his trustee in bankruptcy or not to him directly. It's okay. Then comes voting through electronic means. If you understand this electronic means, remaining other poll and other things are also easier. Electronic means using some computer softwares and the internet, sitting at some remote place, you can vote at all the resolutions of a company. So company is required to provide the e-voting. Is it mandatory for every company to provide the e-voting facility? They tell no. If your company having at least 1,000 or more members, or you are in a listed company irrespective of the members, or unlisted company having at least 1,000 members, compulsorily has to give e-voting facility for all the members. But e-voting is not required to be for Nidhi company or some institutional investors, etc. So e-voting applies to general meetings for which notices are issued after this commencement of this rule. This rule, whenever they came in the publication, from then it is applicable. Before that, it was not applicable. What is the cutoff date for that? Cutoff date to set as a date not earlier than 7 days before the general meeting to determine the voting eligibility. For example, consider meeting they want to conduct on 10th of April 26. Now, which members are eligible to vote? Sir, if I purchase shares on 9th also, am I eligible to vote? No. They have to decide something called as cutoff date. That means if you are shareholder on this date, then you are eligible. If you are shareholder after this date, then you are not eligible. For dividend also, the cutoff date is there. For shareholding, voting also it is there. But here the difference is, they are telling cutoff date is set as a date not earlier than 7 days before the general meeting. That means if the meeting is on 10th, you can keep max to max 3rd. You can't keep, even if you are holding the shares on the 10th of April 26. Even if you are holding shares on 1/4/25, you are not eligible for voting. No, you can't go there. You can decide as 9th also. You can decide 8th also. Max to max 7 days back you can go. Not beyond that. And e-voting system involves a secure system-based process to display electronic ballots, record votes, and count the number of votes for and against. Store the voting results in a centralized server and system cyber security. That's okay. What is cyber security? You read it. ಅಲ್ಲಿ ಬಟನ್ ಹೊತ್ತು ಅಷ್ಟೇ. ಇನ್ನೊಂದ್ಸಲ ಮಾಡು. ಹಂಗ್ ಮಾಡ್ಬೇಡ, ಹಿಂಗೆ ಮುಂದೆಯಿಂದ ಮಾಡ್ಬೇಕು ಅದನ್ನ. ಓಕೆ 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 ಅಂದ್ರೆ ಲಾಂಗ್ ಪ್ರೆಸ್ ಮಾಡು. So what is remote voting facility? Remote voting means voting electronically from anywhere outside the meeting venue. Other than meeting venue, you can vote anywhere. What are the voting types available? Voting electronic means includes both remote voting facility and voting at the meeting using the same system. That means you can come and sit on the meeting also, click on that, vote it. What is secure system? I'm not reading that. This is computer software where unauthorized access is prevented or nobody can hack it. All those things are there. Then how do you conduct the voting? The same thing, whatever it is there with respect to notice, you should give 21 days notice for the conduct of meeting. The notice must be sent to all the members, directors, auditors, etc. Either you can send it by RP or SP or courier services, or electronic means that is by email. And the notice also has to be kept at the website of the company. And if you have appointed any agency for the purpose of conducting anything, then you can keep in the agency's website also immediately after sending to the members. Then the notice must contain what? The facility for voting by electronic means is available. The availability of voting by ballot or polling at the meeting. Members who voted by remote e-voting cannot vote against the meeting. That means you can come and sit at the meeting, but you can't vote there. Process of e-voting electronically, time, schedule, login, password details, everything has to be given in the process. Consider, I think I shown that. This year they're telling remote e-voting facility for AGM will end on 5 p.m. IST today. Something. That is a reminder mail. They are telling that how do you log in, how do you, that is not given there. I think it is there in some other thing. So when does e-voting commences? 25/9/25 10 a.m. and 24/10/2025 5 p.m. it will conclude. How do you log in? Login methods for e-voting, virtual meetings, etc. Maybe if you are having click on this link, user ID, password, everything will be generated. They're trying to tell something. You just follow that. So remote e-voting facility will remain open for at least 3 days and closes at 5 p.m. on the day before the meeting. If the 20th is the meeting, 19th 5 p.m. that has to close. If you look at our notice also, they are given 5 p.m. only. But what is the date of meeting? The date of meeting should be 25th of October, I feel, because they are closing on the day before meeting, 24th. So meeting is held on 24 end that happens. Meeting date and time that is not given, that is 25 only. Day before the meeting you have to end. Then cutoff date for eligibility. Members holding shares on cutoff date can opt for remote voting. Votes cannot be changed once it is being cast. The moment it is yes, then it is yes. If it is no, it is no. Members can attend the meeting but cannot vote again if the voted remotely. That means you can vote in the home, come to the meeting, have tea, snacks, but can't vote. After e-voting period ends, the voting facility will be blocked. That means automatically blocked. You can't vote there also. And you have to publish that notice by way of advertisement. The company must publish a notice as an advertisement immediately after sending the notice, but at least 21 days before the date of general meeting. 21 days before you should send the notice, 21 days before you should advertise the notice. Where? Vernacular newspaper as well as English newspaper. And what should that advertisement include? Advertisement should also include whatever the things we discussed till now. Statement that business can be transacted through electronic voting, start date and end date of remote voting, cutoff date for eligibility not earlier than 7 days, instructions of shareholders who are acquired shares after notice dispatch to obtain the login credentials. Remote voting won't be allowed after the deadline, that is 5 p.m. on the day before the meeting. And the people who already voted can attend after remote voting but cannot vote again in the meeting. And the company's website, if somebody want to come and visit that notice again, and the contact details if there is any problem with respect to credential generation, login ID, password with for remote voting, for grievances handling. Grievances means complaint. Go through that entire part once. We'll continue the continue part, the scrutinizer. Then scrutinizer. What is this scrutinizer? Whenever company want to conduct the meeting at the electronic means and all those things, somebody has to oversee how this process is being happening. Then every company has to compulsorily appoint a scrutinizer, maybe one or maybe multiple scrutinizer depending on the quantum of the votes or quantum of the members that is being there with the company. So the board of directors shall appoint one or more scrutinizers. Then the scrutinizer can be who can be there. Any professional person, CA, CS, CMA, who is in practice or advocate. Any other reputable person who is not employee of the company and is considered capable of by the board. That means independent party. And scrutinizer may seek assistance from non-employee experts familiar with the electronic voting system. If you want any assistant, you can bring somebody from outside who has some knowledge regarding that electronic voting facility. And what is the role of chairman? Chairman should allow the voting at the meeting for members who haven't voted remotely with the help of the scrutinizer. And whenever that voting completes, whenever voting is completed, then scrutinizer should count the votes. Or how he should count the votes? First, he will count the votes which are casted in the meeting, physical meeting, whatever it has happened, or virtual meeting, whichever has happened. In that meeting, how many of you said yes, no, you, they'll prepare the votes. Once they compile the votes, after that, whatever the votes casted electronically, that is also taken out. And how many yes, how many no, how many neutral, then they'll add it and they prepare a summary report. We call it as scrutinizer's report. And that scrutinizer report should consist of what are the agendas, how many yes, how many no, is it passed or not, and it has to be submitted to the chairman within some period, and chairman has to sign it and keep it in the custody of company secretary. See there. Scrutinizer shall immediately after the voting concludes at the general meeting first count the votes cast against the meeting at the meeting, then unblock the remote voting results in the presence of at least two independent witnesses. This is important because people should not tell that it is biased and you did some vote rigging, all those things. Within 3 days, prepare a consolidated scrutinizer's report detailing the total votes in favor, against, and submit it to the chairman and the authorized person who shall countersign it. That means sign it. The chairman or authorized person shall declare the voting results immediately. That means when you give the results, they'll immediately declare it. The way members voted shall remain confidential and will not accessible to the chairman, scrutinizer, or any other person until the votes are officially cast at the meeting. That means they'll not disclose identity, how many yes, how many no, which everything. So company should give scrutinizer the access detail about members who voted remotely to ensure they don't vote again, because duplication of votes should not happen. And scrutinizer should maintain a register of votes including the member details and voting confirmation information, safeguards the register and all related voting documents until the chairman signs the minutes. Then whatever the results has come, that has to be declared even in the stock exchanges website also, even the agency's website also. Then if the required votes are, or this, if the resolution required the required votes, then we tell that resolution has been passed. And once the resolution is passed, cannot be withdrawn once it is not proposed, once it is passed. This is with respect to electronic voting facility. Then comes poll and what is this? Postal ballot. They are similar way. Postal ballot is kind of, you remember the old voting system. They used to take a paper, put the seal and put it there. Either it can also happen now. Current EVM machines, that is also there. Postal ballot means anything where there is a confidentiality to be maintained. So poll means similarly, before or at the time of declaring the results of voting by show of hands, the chairman may conduct at a poll on his own or upon demand by any specified persons. Sir, who can demand the poll? The person who are holding or the proxy, because proxy is also allowed for poll, who are holding at least 1/10 of the total voting power. What is 1/10 of the total voting power? More than or equal to 10%, or paid up value which is not less than 5 lakh rupees. That means more than or equal to 5 lakh rupees of paid up capital. Other companies present in persons by proxy are holding at least companies. That's okay. Share capital is share capital, voting power, shares. Here other company means other guarantee company, other company, 1/10 of the total voting power. Then withdrawal of poll for poll demand. The demand for poll can be withdrawn at any time by those people who made the demand before the results are declared. Once the results are declared, you can't take back that demand. Time limit for conducting the poll. When should the for example, I asked, sir, I want the poll, I don't want the show of hands. By what time the chairman should conduct the thing? There are only two things which has to be conducted immediately. Except those two things, everything can be postponed and conducted within 48 hours from the date of requisition. Generally 48 hours. So what are the two things? When you want to appoint the chairman by poll instead of show of hands, then you can't tell that, sir, we will conduct the meeting after poll after 2 days. No, I want the chairman to be changed, which is for the current meeting. If you tell we will do the poll after 48 hours, then oh, what the hell, what the nonsense, that is gone. Or if somebody want to adjourn the meeting, then if you tell after 48 hours, sir, I don't want this meeting to happen this time, I want it to happen in the next week. You tell that come after 48 hours, within 48 hours, then this meeting would have completed. That is why appointment of chairman by poll and what is this one more thing? Adjournment of the meeting. Under both the situations, the demand for poll shall be taken immediately. In all the other cases, it should be taken not later than 48 hours from the demand for any other question as directed by the chairman. Immediately for adjournment of the meeting and appointment of chairman. Then scrutinizer part is same. Exactly whatever we discussed for there, the scrutinizer will do the same part. Remaining part is same with respect to the poll. Scrutinizer part entirely same. Then comes postal ballot. This is an important area again. Postal ballot tells that there are certain areas which has to be compulsorily discussed in postal ballot. Two areas which we already discussed. Whenever you are changing the object class of for money which is raised. Second one is buyback of securities. There also we will discuss the postal ballot. Here there are some items where central government has mandated to compulsorily deal in the postal ballot. What are those matters? First one is alteration of object class in MOA. Definitely postal ballot. Alteration of articles of association. Change in the registered office beyond the local limit. Change in the objects of raised funds, which we discussed. Issue of shares with a DVR. Variation in rights of shareholders and rights. Buyback of securities. Election of a director by small shareholders. Who are small shareholders? That is not there for your syllabus, but I think I discussed in the regular class. Any shareholder who holds less than 20,000 rupees worth of face value of the shares is called a small shareholder. So to protect their interest, company those shareholders can appoint anybody as director on behalf of them. And sale of whole or substantial undertaking or providing loans, guarantee securities exceeding prescribed limit under Companies Act. For all these things, compulsorily postal ballot only has to be discussed. You have to remember these things. They may ask what are the matters that has to be discussed by way of postal ballot. Compulsory 5 marks question can come. Sir, how much voting we have? It is proportional to the share of paid up capital. If you are holding 100 shares, 100 votes, 200 shares, 200, it is up to you. And types of ballot. Ballots will be of assent ballot, dissent ballot, and partial votes and invalid ballots. Ballots means whenever you take it out, you will put it that ballot, right? Voting booth ballot. How many of you told us you keep it in this ballot? How many of you know keep it in this ballot again? Invalid and partial votes. That has to be done. Then they're telling resolution is deemed to be passed if the assents exceeds dissent. That means more than 50%, not more than or equal to. More than 50%. Assents exceed dissent means yes or more compared to no. More than 50% is there. Then postal ballot means voting by post or through electronic mode. Both are allowed. So the company must transact specific business items declared by the central government via postal ballot only. Whatever we discussed item na compulsory that has to be postal ballot. or may transact any other business items, mainly except ordinary business, that adda points, except that everything can be conducted in postal ballot. So items mandated for postal ballot under A may also be transacted at general meeting if via electronic mode is available also. So a resolution approved by the requisite majority via postal ballot is deemed as passed at the general meeting. That means postal ballot you get more than 50%, that is also considered as the voting has been completed. So this can be asked as an MCQ. If you are an OPC or company which is up to having 200 members, they are exempt from the postal ballot. See, OPC up to 200 member ಅಲ್ಲ, ಯಾಕಂದ್ರೆ OPC has only one member. OPC and any other company up to 200 members are exempt from the postal ballot. That means private companies totally gone out of the postal ballot because maximum number of members for private companies 200. Public company also sometimes go out because minimum is 7, maximum is unlimited. They may have 50, 100, any kind. Sir, how do you conduct the postal ballot thing? Again, procedure. A company sends a notice to all the shareholders along with the draft resolutions and reasons for the postal ballot. It is like same 21 days notice. 21 clear days notice. Shareholders must send their assent or dissent in writing within 30 days of dispatch. And the notice sent via should contain, sorry, how can you send the notice, or you can send the RP? Actually, SP is not available. Post office only closed the speed post service. So still law is kept it, we will keep it. Register post or SP or electronic mode or courier services. So, under this they ask even allowed private courier also. And other case courier was not allowed. Advertisement again, vernacular newspaper, English newspaper. Advertisement must include every voting has to be done via postal ballot, date of dispatch and date of commencement of voting, end of voting. Any postal ballot received beyond the due date is invalid. We have to tell this statement also. And contact details of our grievances. If somebody can't pass or put any vote, then who can they contact? And whatever the notice you give now, that has to be kept in the company's website immediately. And it will remain until the last day of the receipt of votes. And scrutinizer part again same. I am not discussing that scrutinizer part again. Then comes section 111, that is scrutinizer. You can go through that. Still, how many pages is there? It is not getting over only. 1, 2, 3. Still 9 pages, huh? We completed 2/3 of the management still. So anyway, this key exam tips I'm not reading. 1, 2. This OPC also remove that. 3. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 pages are there. 88 and 89. 89 and 90. That also one page. Some 10 pages is there. Anything understanding or just going over or this all clear? Recalling. You should do that at home and come and listen here. 5, 6 ಓದ್ಕೊಂಬಂದಿದೆ ಹಂಗಾದ್ರೆ ಮತ್ತೆ ಅಬೌವ್ ಹ್ಮ್ For example, if you are keeping the meeting on 10th, leave the meeting date 9, 8, 7, 6, 5, 4, 3. ಸೊ ಥರ್ಡ್ ವರ್ಗು ಅಷ್ಟೇ. ಇಫ್ ಯು ಪರ್ಚೇಸ್ ಎನಿ ಶೇರ್ from 3, 4, 5, 6, 7, 8, 9, 10, then you are not eligible to vote. So eligibility, you can keep it 1 week, you are not eligible. For 1 week, you are eligible. That means 2, 1, 30 last month, everything is eligible. Whole day, whole night. ಥರ್ಡ್ ಫೋರ್ತ್ ಎಲ್ಲರೂ ಬರುತ್ತೆ. ಅದಕ್ಕೆ ಕಟ್ ಆಫ್ ಡೇಟ್ ಇಡೋದಲ್ಲ. ಇಫ್ ಯು ಪರ್ಚೇಸ್ ಆನ್ 5th and later, then you are not eligible to vote. ಹೇಳೋ ಎಮ್ ಜೆ, ಏನು ಡೌಟ್ ಇದೆ? ಜೀವನದ ಮೇಲೆ ಡೌಟ್ ಇದೆ ಸರ್ ನನಗೆ. ನಿಮ್ಮ ಮೇಲೆ ಪ್ರಯೋಗ ಮಾಡಿದ್ದೀನಿ. ನೀವೆಲ್ಲ ನಾಳೆಗೆ ಬಂದರೆ ನಾನು ನಾಳೆ ತಿಂತೇನೆ. ಅದು ಸ್ಲೋ ಆಗಿ ಎಫೆಕ್ಟ್ ಆಗುತ್ತೆ. ಅದು ಜನರಲ್ ಐ ಹ್ಯಾಡ್ ಅ ಕಾಫಿ, ಸೊ ತಿನ್ನಲ್ಲ ಈಗ. ನಾನು ಇನ್ನಷ್ಟು ಸ್ವೀಟ್ ಇಲ್ಲ, ನಾನು ಶುಗರ್ ಫ್ರೀ ತಿನ್ನೋಕ್ಕಾಗಲ್ಲ. If you need some pickup lines, ask me, I'll give you. No? Experience. But I never use those things. Why not possible? See, ಈಗ ನೋಡಪ್ಪ, when the product is so qualitative product, then you don't need to market it. ಅಲ್ಲ ಹಂಗಲ್ಲ. ಅಲ್ಲ, ಬೇರೆ ಬೇರೆಗೆ ಆದ್ರೂ ನಾ ಏನು ಹೇಳ್ತಾ ಇದ್ದೆ, ವೆನ್ ಯು ಆರ್ ಸೋ ಗುಡ್ ಅಟ್ ಎವ್ರಿಥಿಂಗ್, ದೆನ್ ಯು ಡೋಂಟ್ ನೀಡ್ ಟು ಮಾರ್ಕೆಟ್ ಯುವರ್ ಸೆಲ್ಫ್ ಟು ಕನ್ವಿನ್ಸ್ ದಟ್ ಐ ಆಮ್ ಗುಡ್, ಐ ಆಮ್ ಸೂಟಬಲ್. ನೋ, ನಾಟ್ ರಿಕ್ವೈರ್ಡ್. ಏನೋ ಬೆಲ್ಲ ನೋಡ್ಕೊಂಡಿರುವೆ ಬಂದೇ ಬರುತ್ತಂತಲ್ಲ, ಹಂಗೆ. ಯು ಜಸ್ಟ್ ಹ್ಯಾವ್ ಟು ಬಿ ಇನ್ ದಟ್ ಪ್ಲೇಸ್. ಬೆಲ್ಲ ಎಲ್ಲಿದೆ ಹೇಳಿ ಸರ್, ನಾನು ತಿಂದ್ಬಿಡ್ತೇನೆ. I used to give advice for many people. ನವೀನ್ ಸರ್ಗ ಎಂ ಜೆ ಕೊಡ್ತಾವನೇನು? But many people succeeded by taking that. Many people see, even I teach everything. The way you execute in the examination will decide your result. The same way happens in everywhere. ನಾ ಏನ್ ಹೇಳ್ಕೊಟ್ರು ಅವ್ರು ಹೋಗಲ್ಲಿ ಯಾವ ತರ ಎಕ್ಸಿಕ್ಯೂಟ್ ಮಾಡ್ತಾರ ಅನ್ನೋದ್ರ ಮೇಲೆ will that be successful or not. I also got it from many seniors by this talking to them. Some faculties also used to be like that, and some things are only developed by seeing here and there. ಏನೋ ಜೀವನ ನಡೀತಾ ಇದೆ. ಅದ್ರ ಬಗ್ಗೆ ಥಿಂಕ್ ಮಾಡೋದಿಲ್ಲ. ಏನಿದೆ ಯಾವತ್ತಾದ್ರೂ ನಿಂದಿರಬೇಕು, ನಿಂತಾನೆ ಇಲ್ಲ, ಅದಕ್ಕೇನಿಲ್ಲ. ನಂದು ಇಲ್ದಿರಲ್ಲ. ಎಲೆಕ್ಷನ್ ಇದ್ದಾಗ ಇಲ್ಲ, ಐ ವಾಸ್ ರೆಡಿ ದಟ್ ಐ ನೋ ದಟ್ ಇಟ್ ಇಸ್ ನಾಟ್ ಗೋಯಿಂಗ್ ಟು ಬಿ ಪೋಸ್ಟ್ಪೋನ್ಡ್. ಹಾಂ, ಇಲ್ಲ, ನಾ ಫೇಲ್ ಆದಾಗ ಯಾವತ್ತೂ ಬ್ರೇಕ್ ಡೌನ್ ಆಗಿಲ್ಲ. ಯಾಕಂದ್ರೆ ನಾನೇನು ಮಾಡಿದ್ದೀನಿ, ನನ್ನ ಸ್ಟ್ಯಾಂಡರ್ಡಿಗೆ ತಕ್ಕಂಗೆ ರಿಸಲ್ಟ್ ಬಂದಿದೆ. ಐ ಆಲ್ವೇಸ್ ಕನ್ಸಿಡರ್ ದಟ್ ಇಫ್ ಐ ಆಮ್ ನಾಟ್ ಪಾಸ್ಟ್ ದೆನ್ ಐ ಡಿಡ್ ನಾಟ್ ಸ್ಟಡಿ. ದಟ್ ಇಸ್ ವಾಟ್ ಮೈ ಒಪಿನಿಯನ್ ಆಲ್ವೇಸ್. ಫಸ್ಟ್ ಇಂಟರ್ಮೀಡಿಯೇಟ್ ಫಸ್ಟ್ ಅಟೆಂಪ್ಟ್ ಫೇಲ್ ಆದಾಗ ಐ ಹ್ಯಾಡ್ ದಟ್ ಸಿಕ್ತಿತ್ತು ನನಗೆ, ಇನ್ನೂ ಎಷ್ಟು ಓದ್ಬೇಕು ಬರಬೇಕಂತೇಳಿ. ಬಟ್ ಲೇಟರ್ ನೋ, ಯು ಪ್ರೂವ್ ದಟ್ ಯು ಬಿಲಾಂಗ್ ಟು ಸಮ್ ಕಮ್ಯುನಿಟಿ, ದೇ ವಿಲ್ ಅಲೋ ಯು ಟು ಬಿ ಇನ್ ದಟ್ ಕಮ್ಯುನಿಟಿ, ದಟ್ಸ್ ಇಟ್. If you are not getting in there, then you are not proving yourself to be in part of that community. So prove ಮಾಡ್ಲಿಕ್ಕೆ ಏನು ಬೇಕಲ್ಲ ಅದು ಮಾಡಬೇಕಷ್ಟೇ. It happens with the life also. See, when you decide the friends also, that is the same category. There are few people, a few category of friends where they don't allow the next person only, unless until they know that you are belonging to that category. ಅಲ್ಲ, ಇಲ್ಲಿ ಏನಾಗಿರಲ್ಲ, ಬಟ್ ವೆನ್ ಯು ಕಂಪೇರ್ ದಟ್ ರಿಚ್ ಆ್ಯಂಡ್ ಪುವರ್ ಫ್ರೆಂಡ್ಸ್ ಇದ್ದಾಗ ಏನಾಗುತ್ತಲ್ಲ, ಅದು ಟೈಪ್. ನಾವು ಸೀನ್ ದಟ್ ಲೈಫ್ ಈಸ್ ಬ್ಯೂಟಿಫುಲ್ ಯಾವುದೋ ಮೂವಿ ಐತಲ್ಲ, ಅಲ್ಲೊಂದು ಸ್ಲಮ್ ಏರಿಯಾ ಇರ್ತೈತೆ, ಅದಕ್ಕೊಂದು ಗೋಡೆ ಇರ್ತೈತೆ, ಆ ಕಡೆಗೆ ಎಲ್ಲ ರಿಚ್ ಪೀಪಲ್ ಇರ್ತಾರೆ. ತೆಲುಗು ಮೂವಿ ಇಟ್ ಈಸ್ ಬ್ಯಾಂಗ್ಳೂರ್ ಡೇಸಾ ಅಲ್ಲ, ಹಾಂ, ಹಿಂದಿಲಿ ಗೊತ್ತಿಲ್ಲ, ತೆಲುಗಲ್ಲಿ ನೋಡಿದೆ ನಾನು. ಈವನ್ ಶೀ ಈಸ್ ಆಲ್ಸೋ ದೇರ್, ಶ್ರೇಯಾ ವಾಟ್ ಈಸ್ ದಟ್ ಆಕ್ಟರ್ಸ್. ಲೈಫ್ ಈಸ್ ಬ್ಯೂಟಿಫುಲ್ ಅನ್ಸುತ್ತೆ, ಶ್ರೇಯಾ ಗೊತ್ತಾ, ಇರ್ಲಿ ಬಿಡಿ, ವಿಲ್ ಡೂ ದ ಮ್ಯಾರಥಾನ್. ಯು ಕ್ಯಾನ್ ಸರ್ಚ್ ಇಟ್ ಆಫ್ಟರ್ 2 o'clock. ಹಾಂ, ಹ್ಞೂ, ಹಂಗೆ ಅದು. ವೆನ್ ಯು ಆರ್ ವೇಟಿಂಗ್ ಫಾರ್ ಸಮಥಿಂಗ್, ಹ್ಞೂ, ವೆನ್ ಯು ಆರ್ ವೇಟಿಂಗ್ ಫಾರ್ ಸಮಥಿಂಗ್, ಅದರಲ್ಲೊಂದು 2 ಫ್ರೆಂಡ್ ಕ್ಯಾಟಗರಿ ಗ್ರೂಪ್ ಇರುತ್ತೆ, ಅದರಲ್ಲಿ ಅದು ಇದೆ ನೋಡಿ ಡಿಸ್ಕ್ರಿಮಿನೇಷನ್. ವೆನ್ ಯು ಆರ್ ಲಾಂಗಿಂಗ್ ಫಾರ್ ಸಮಥಿಂಗ್, ಇಟ್ ಫೀಲ್ಸ್ ಲೈಕ್ ಸೋ ಲಾಂಗ್. ವೆನ್ ಯು ಡೋಂಟ್ ಕೇರ್ ಫಾರ್ ಸಮಥಿಂಗ್, ದಟ್ ಗೋಸ್ ಅವೇ ದಿಸ್ ಸೇಮ್ ಥಿಂಗ್. ನೀವು ಯಾವಾಗಾದ್ರೂ ಎಲ್ಲಾದ್ರೂ ಡೇಟ್ಗೆ ಹೋಗ್ಬೇಕಾಗಿರುತ್ತೆ, 5 o'clock ಅಂದಿರ್ತಾಳೆ ನಿಮ್ಮ ಹುಡುಗಿ, ಅದು ಓಕೆ ಹುಡುಗ ಅಂತ ಇಟ್ಕೋ, ನಿಂಗೆ ಬಿಟ್ಟಿದ್ದ ಅದು. ಆ ಅಸಂಪ್ಷನ್ ಮಾಡ್ಕೋ ಅಟ್ಲೀಸ್ಟ್. ಸೊ ಈಗ 4:50 ಆಗಿರುತ್ತೆ, ಒಂದು 50 ಸರಿ ವಾಚ್ ನೋಡ್ತೀನಿ ನಾನು, 5 ಆಯ್ತಾ ಇಲ್ಲ ಅಂತೇಳಿ. ಬಟ್ ಜನರಲ್ ನಾರ್ಮಲ್ ಟೈಮ್ದಾಗ ನೋಡಲ್ಲ, ಯಾಕಂದ್ರೆ ಯು ಆರ್ ಲಾಂಗಿಂಗ್ ಫಾರ್ ಸಮಥಿಂಗ್. ಸೊ ನೀವು ಯಾವ್ದ್ರ ಬಗ್ಗೆ ಆದರೂ ಅದ್ರ ಬಗ್ಗೆ ಭಾಳ ಥಿಂಕ್ ಮಾಡ್ತಾ ಇದೀಯ ಅಂದಾಗ ನಿಂಗೆ ಅದು ಡೆಕೇಡ್ಸ್ ಅನ್ಸುತ್ತೆ, ಹಂಗೆ ಎಟರ್ನಲ್. ಏನು ಅರ್ಥ ಆಗಿಲ್ಲ ನನ್ಗೆ ಗೊತ್ತಿದೆ, ನೀನು ಮಾಡ್ಕೊಂತ ಕುಂತಿದ್ದೆ ಅಷ್ಟೇ. ಆ ನಾನು ನಿಂಗೆ ಹೇಳಿರೋದು ಅರ್ಥ ಆಗೋದ್ರೆ ಏನಿದೆ. ಓಕೆ, ಕಮಿಂಗ್ ಬ್ಯಾಕ್. ಸೆಕ್ಷನ್ 111, go in the section that Nama they'll put go in the. So circulation of members, resolutions and statements. See, whenever the company wants to call the meeting, company will call the meeting by itself, whether it is AGM or EGM. But sometimes when the members ask for the purpose of calling the meeting, then company has to circulate those statements to the other members. When I say some members are calling the meeting, which members are can call the meeting? First of all, for the purpose of requisition, a valid requisition must be meet the following conditions: written and signed by for companies with share capital, members holding at least 1/10 of the paid up share capital with voting rights. For companies without share capital, members holding at least 1/10 of the total voting power. It is just share capital and voting power, that's the difference, 1/10. Second, 2 or more copies may contain signatures of all requisitions. That means out of 100, more than at least 1/10 andre, that means 10 people, 10 persons has to sign it, and that should be signed by all the 10 people. That should be signed by 2 or more copies. Why 2 or more copies? I gave a copy to company, that company will keep it, and 1 more copy they will circulate it to the other members of the company. 2 or more copies, and 1 copy you will keep it yourself. What is the time limit for deposit? Whenever you want to call a meeting, resolution requiring a notice, that means you are giving a resolution so that company should give the notice to the other party. Resolution requiring the notice, then that should be deposited at least 6 weeks before the meeting. What is 6 weeks before the meeting? Almost 1.5 months. If you take 6 weeks, 42 days, but it is right, it is 6 weeks. For other resolutions, Only 2 weeks are sufficient. Sir, what is other resolutions? Where company don't need to give the notice to the members, then 2 weeks are sufficient. Where compulsory should give the notice to the other members to call for the meeting, then at least 6 weeks, because notice time period only 21 clear days is there. If you take 2 weeks, again to 7 plus 7 14, that is not going to happen. Again, you should pay some reasonable amount of money to meet the company's expenses in giving effect to the resolutions is deposited or tendered, because you are calling the meeting. Why the company should incur the expenses? You should incur the expense, but you can't do that. Company is calling the meeting, you pay some money to the company, they'll incur the expenditure. If there is anything extra, they'll refund it back. If there is anything deficit, they'll ask you at a later point of time. However, company is not obligated to circulate any resolution for the notice if the necessary prerequisites are not met. That means you did not give 6 week notice resolution, or you did not pay certain sum of money to the company, then company need not give notice to the other parties of the company. Then, after receiving that requisition, the company shall give notice to the members about any resolution intended to be moved at the meeting and the requisition of the required number of members. See, other members, 10 members has asked for calling the meeting, EGM, extraordinary general meeting. This is the date and time of everything. Please attend the meeting. That notice you have to give. Provide a statement to members regarding matters to be related to the proposed resolution or business of the meeting. What thing we have to do it. And whenever somebody want to misuse that power of giving the resolution to the company for the purpose of unnecessary publicity of defamatory content. For example, I don't like one director and I want to tell that he is having an affair with one more director, all those things. You're trying to defame somebody. Then company feels it is unreasonable. Company can not circulate the resolution to the other members of the company by way of notice. They can keep it by themselves, provided they have a approval of what is this, central government. The company does not have to circulate the statement if central government or RD declares that requisition is being misused for unnecessary publicity for defamatory content. Then every cost has to be borne by requisitionist. If the company incurs that has to be reimbursed by the members to the company. And if there is any default, then there is a penalty of rupees 25,000, not fine, flat 25,000. Then comes OR versus SR. What is OR and what is SR? Ordinary resolution and special resolution. What is ordinary resolution? In simple line, if I want to tell it, any resolution on which more than 50% of the votes are casted is called as ordinary resolution, or any resolution in which more than 75% of the votes are casted, that is called as special resolution. But if I go by technically, any resolution for which votes casted is not less than the votes casted against the resolution. Sorry, any resolution on which votes casted in favor is more than the votes casted against the resolution is called as an ordinary resolution. Votes casted in favor is more than the votes casted against the resolution. How many of you told yes? That should be more than how many of you told no. Then there is OR. What is special resolution? The votes casted in favor of the resolution is not less than 3/4 of the votes casted against the resolution. That means if 25 people tell no, at least 75 people has to tell yes, not less than 3/4. Then only it is special resolution. And whenever you give the notice, you have to specifically mention that in the notice, for this business we are going to pass a special resolution. That intention of passing special resolution has to also be mentioned. Required resolution number also has to be mentioned. A resolution is a formal decisions of an organization taken at a meeting. See, whenever you want to take the decision, we can take it independently. When a company, everybody is there, we can't ask everybody individually. That is why we go for voting method. A motion once approved by a required majority, it becomes a resolution binding on the organization. There are difference between motion and resolution. Motion means the same thing only before it is passed in the meeting. The proposed thing is called as motion. If you vote on that motion, that becomes a resolution. It is like Finance Bill and Finance Act. Finance Bill is something where Parliament did not approve it. Finance Act is something Parliament has approved it. That is the same difference between motion and resolution. There's a distinction. You can read that. An OR is passed by simple majority, that is votes cast in favor exceeds votes cast against the resolution. Then SR requires the notice for the general meeting or any other communication to members must clearly state intention to propose the resolution is a special resolution. That means in the notice tell that this is SR, this is OR, this is SR, OR. And proper notice should be given, that is section 101 notice, proper notice has to be given, and votes cast in favor or at least 3 times the votes cast against the notice meeting. Then comes 115 section, that's it with respect to OR and SR. Resolution requiring special notice. See, special resolution is different, special notice is different. Ordinary notice we discussed under 101. Whenever the company calling the meeting, then they should give 21 clear days notice. That is 101 notice, ordinary notice. What is the special notice? Not for ordinary businesses. Whenever you are dealing in extraordinary businesses, there are, I think, 4 businesses which are there, not 4 businesses, only 4 businesses which are there, for which special notices has to be compulsorily given. They are very extraordinary businesses. Sir, who can give the special notice? The person who are having paid up share capital of 5 lakh rupees or holding at least 1% of the total voting power. You should understand the difference in multiple places. 111 notice also, in every resolution we told 1/10 of the voting power. Here it is 1/100th of the voting power, or 1% it is. There 10% it is 1%. 1% is there only for 115 section. 1% of the voting power or paid up share capital of 5 lakh rupees. Whichever is less, can give special notice for what activities. If somebody want, you should remember this 4 activity. Yeah, it is important. 4 marks question can come in the examination. Cases where section 115 special notice is required. Whenever somebody want to, some members want to, see, this special notice is given by the members to the company that we want to conduct a meeting. That persons has to be 1% or 5 lakh, whichever is lower has to be there. For what activities? Appointment of auditors other than the retiring auditors at the AGM. Somebody is going out, you don't want to reappoint them, yes, tell that we are appointing somebody else in your place. For that, you should give a special notice. Or you are passing a resolution, you want to pass a resolution at the AGM to prevent the reappointment of the retiring auditor. To prevent reappointment of retiring auditor. What is the difference between first and second point? In the first point, you are appointing already somebody. In the second point, you are making sure that you don't want to appoint the retiring auditor. For these 2 things are related to auditor's part. Then remaining 2 things are related to director. Whenever you want to remove a director before the end of the term, you should give a special notice. Or you want to appoint a new director in the place of removed director. Auditors, when you want to tell that a retiring auditor will not be reappointed, give a special notice and tell that don't appoint him. Second case is whenever you want to appoint somebody else as an auditor in the place of retiring auditor, then also you give the notice. Third case, when you want to remove the director before the end of his term, give the notice. When you appoint somebody else in the retired place of the director, then also give a notice. 4 cases, special notice are compulsory. If the AOA wants, they can add some additional matters also. As of now, not added anything. In Companies Act also not there. Sir, what is the requisite things? Again, I told members holding at least 1% of the voting power are paid up share capital of 5 lakh rupees. Sir, where is it lower or higher they have given? They told just at least. That means if you have only 1%, that is sufficient. At least 1% or at least 5 lakh. That means whichever is lower concept only this is. So notice shall be sent to the company not earlier than 3 months and at least 14 days before the meeting. That means if the meeting is there in the month of April 1, March, Feb, Jan. Before Jan, you should not give it. But April 1 means come back 14 days. That means March 16th. So you should give the notice not after March 16, not before Jan 1st. Look at the language, understand it. Notice shall be sent to the company. That means you are giving to the company not earlier than 3 months. That means Jan, Feb, March, 3 months. Don't go beyond that. You can give on Jan 1st also, that's okay. And at least 14 days before the meeting. If the meeting is on April 1, at least 14 days before the meeting, that is March 16th. Jan 1 to March 16th is your deadline to give the notice to the company. After that, notice to the company will again circulate it to the other members. The day of notice and day of the meeting are excluded. This is in every case it is there. You should not come to any conclusion. After receiving the notice, sir, if the consider I want to remove a director, I have an option to give at least 14 days notice. Consider meeting is on April 1st. I want to give on what is this 15th of March. Now they have only 15 days left. But whenever the members company want to give the notice to members, they should give 21 days notice. Here the 21 days notice is not applicable. Only for this special notice. So the company shall inform its members about the resolution at least 7 days before the date of meeting. 7 days concept has come here. Excluding date of dispatch and date of meeting. In the same way, general meeting give the notice. That means you send it to everybody, but 7 days thing is there. All the notices by the company to members 21 days, except in case of section 8 company. But when the company is intimating the members with respect to special notice concept for 4 activities, they can go for at least 7 days notice. Remaining everywhere it is 21 days notice. This is from company to members. Now other members to the company. It again depends on that resolution requiring people go in the section. Resolution, what is that? Meeting called by requisitionist, EGM. Then what is the time period by which they have to give it here? At least 21 days before the meeting they have to give it. What special notice? At least 14 days, maximum is 3 months. If it is not possible to give the notice in the same manner of the giving that, then you can publish that in the English newspaper and vernacular newspaper at least 7 days before the meeting. At least 7 days before the meeting. Again exclude 2 days and also post that on a company website if it is applicable for you people. For which company? Mainly for listed company, this website concept is applicable. That is with respect to this thing. This is very important section 115. Many times it is being tested. You should remember the 4 activities and that percentage 1% or 5 lakh paid up capital and the time period 14 days, not earlier than 3 months and not later than 14 days. At least 14 days before the meeting. And whenever the company is giving 7 days meeting has to be there. That is sufficient. Then it is a simple line. Whenever you pass a resolution in adjourned meeting, you want to conduct on 1st April, quorum was not there, you put it on 8th April. Now, in the 8th April resolution has been passed. In the resolution you will you tell that resolution passed on 8th or resolution passed on 1st? 8th, because actual passed is on 8th. That is what they are trying to tell. What is the date of passing? The actual date of passing is a passing, not earlier than the actual date of passing. So it is considered passed on the actual date of the adjourned meeting, not on any earlier date. Then comes resolutions and agreements to be filed. To be filed with what? To be filed with ROC. We can't file with anybody. The following must be filed with ROC. What are those things? Special resolution. Resolutions agreed by all the members, but which would only be effective if the passed by special resolutions, board resolutions, agreements. Resolutions or agreements approved by a specific class of members, which would not be effective without such approval. The moment you do any resolution with the members or by the directors, that everything has to be filed with ROC. Sir, when should you file? They tell that shall be filed with ROC within 30 days of with the prescribed form in MGT 14. You have to file within 30 days of passing that. In case of IFSC, 30 days is replaced as 60 days. Maybe an MCQ point. Some penalties, I am not reading that. Then comes minutes of the meeting. Sir, what is this minutes of the meeting? It is a summarized version of the entire decisions, resolutions passed and decisions taken at the meeting. So every company shall prepare, sign and keep the minutes of general meetings of shareholders, creditors, resolutions passed by the postal ballot, board meetings and committee meetings. When within 30 days of meeting are resolutions in the books with consecutively numbered pages. That means if the minutes is 10 pages, page 1, 2, 3, 4, 5 consecutively means continuous numbers has to be there. That has to be there in a physical or electronic format. Then what should be there in the minutes? Minutes should contain a fair and correct summary of the proceedings of the meeting. We wanted to discuss on this matter. These people told yes, these people told no, everything. For appointment made at the meetings, yes, we appointed some 3-4 directors. For board meetings or committee meetings, name of the directors present and name of the directors dissenting are not concurring with the resolution. Not concurring means not agreeing with the resolutions only. So yes, no, everything has to be written. And exclusions from the minutes. What can be excluded? It is up to the chairman's discretion. If the chairman feels that any content is defamatory content or any content is irrelevant or immaterial content. When you started a meeting, somebody started telling that hi macha uta aita, because meeting is started, that also has to be recorded. If the chairman feels it is irrelevant or this immaterial, then he can exclude it. And if something is detrimental to the company interest, then also that can be excluded. So what has to be included, what has to be excluded, it is at the absolute discretion of the chairman. Absolute means what? 100%. Nobody has a right to tell that you include this, you exclude this. And minutes serves as, that means the moment you see the minutes, it is as good as telling that meeting has actually conducted, some decisions has taken, and we are approving the meeting. Evidence of the proceedings. Valid meeting and resolutions are presumed unless proven otherwise, and appointment of directors, auditors, KMP, etc. are deemed valid the moment you there is a minutes for that. How do you maintain the minutes? Same thing again. Maintain the distinct minutes book for all the meetings separately. You do the AGM, separate minutes. You do the creditors meeting, separate minutes. Board meeting, committee meetings, etc. Everything has a separate minutes. And minutes should be entered within 30 days of completing the meeting. Yeah, and postal ballot resolutions. Enter a brief report including resolutions proposed, voting results, and scrutinizers report in the minutes. And each page should be signed or initialed. Initialed means what? This one thing. What is signed? Full sign. Doing that. Either you put it the full signature at the end of the page or you put just initial. And at the last page, it should be dated and signed. Compulsory initial is not applicable on last page. Board or committee meetings minutes signed by the chairman of the meeting or next meeting. General meeting minutes, that means if it is a board meeting minute, that board meeting chairman will sign it, or if that chairman is not there, next board meeting chairman will come and sign the last board meeting minutes. If it is general meeting minutes signed by chairman, if the chairman is not there, the director authorized by the board will sign that. If it is a postal ballot resolutions, either chairman will sign it of the board or authorized director by the board will sign that. Whatever the minutes are there, kept at the registered office and preserved permanently. If they want to keep, they can keep at some other location. This is also okay. Then comes inspection of minutes of the meeting. Whenever somebody want to know that who does not come to the did not come to the meeting and you want to know that what has happened in the meeting, all those things, he has the right to go and inspect. So the minutes of the proceedings of any general meeting. Look at the language, they are using the word general meetings. That means minutes of the creditors meetings also will be there, minutes of the board meeting also there. That is not allowed for inspection because they are like internal documents. Even the board meeting minutes also not available for shareholders. Only shareholders meeting minutes are available. Shall be kept at the company's registered office and open for inspection on every during the business hours, that is 9 to 6 p.m. free of charge, subjected to reasonable restrictions for AOA set by the general meeting. When I say business hours 9 to 6 andre, out of that 9 to 6 you should open at least for 2 hours per day. Same concept is there everywhere. And whenever somebody asks a copy, then you can request a copy of minutes. The company shall provide it within 7 days on payment of prescribed fee. Sir, how much is the prescribed fee? They're telling not exceeding 10 rupees. Then penalty is okay. Power of tribunal. Here it is there. Within 7 days you have to give it on payment of fee not exceeding 10 rupees per page. It is per page. If somebody wants soft copy, that means not the printed one, you can give it for free of charge. Hmm? Depending on the business they discussed. If they discuss only one business, some 4 or 5 pages. If they discuss some 100 business, then some respective pages. If you want the entire PDF, then you have to get it. If you want the entire only one provision you want to get it, then that is also allowed. So maintenance of minutes in the electronic form, is it mandatory? Only for two types of company it is mandatory. Same provision, listed company are having at least 1000 shareholders, then they should compulsorily maintain minutes in the electronic form. 1000 shareholders, debenture holders, other security holders, etc. Then the MD, company secretary, etc., by the board shall responsible for the maintenance and security of electronic records, because electronic means there is a chances of being hacked by somebody or destroyed. That is why every responsibility for taking care of those things is there with the top people. And electronic records provision, that should be available for inspection. They can charge any fees, but not exceeding 10 rupees per page. They're telling here, when you are a company, this is earlier now not effective. Earlier it was there. If you are a old company before 2013 Act company, and you used to maintain the physical records for the minutes, or you are nowadays company, but your members are not more than 1000, or your company is not listed. Now your members exceeding 1000, or now your company getting listed. Now physical minutes has to be converted into electronic form because of the specification of condition. You can do it within 6 months from the notification of section 120 of this act. When this act came, notification section 120 has been specified. Before that, if you are maintaining in the electronic physical form, convert within 6 months for electronic form. How should the electronic should be there? It should be accurately recorded for future reference, readable, retrievable, printable, digitally signed and dated whenever it is required, not to be altered or edited after originally digitally signed, etc. And every director, KMP, all those people have a right, what is this, obligation to security of the documents. So the responsible person shall protect the records from unauthorized access, alteration, tampering. He should try to prevent the data loss, that somebody is getting hacking, all those things due to damage or failure of the storage media. Ensure that signatory cannot deny the authenticity of the signed electronic records. Tomorrow when somebody comes and asks that, no, I did not sign this, no, you can't tell that. Maintain a secure and validated computer system, that means you take a backup of everything. And hardware and software also should be there. Ensure the system can detect invalid or altered records. That means the moment you change the record, it should easily detect that it is a duplicate record, kind of things. Some things which are to be there should generally should be there in the PDF format. Those things. You can read that later. That is common. So section 96, that is AGM, and there is one more section called as 100, that is EGM. Sir, what is this AGM? AGM is mandatory for all the companies to hold at least once in a year. And it is mandatory, there is no option for the company. Sir, when should they hold the AGM? Whenever the company finishes the financial year, within 6 months from the end of the financial year, they should conduct an AGM. That is by September 30th. If you are a company which is incorporated in the first year, it is your first year of incorporation, and you can hold your AGM not in 6 months, but you can hold your AGM up to 9 months. That is December 31st. But if you are a company already existing and you can't conduct an AGM within 6 months from the date of AGM, sorry, date of financial year, then you can apply for the government, central government, for the purpose of getting an extension of another 3 months. That means if it is a first AGM, without even asking only, you have 9 months. If it is subsequent AGMs, you have 6 months without asking, you want extension, ask for another 3 months from the authorities. So it is available. Once you conduct an AGM, what do you do in the conduct of AGM? Mainly you try to do mainly 4 businesses. Ordinary business, adoption of accounts, dividend if it is there, we will declare it, appointment, auditor, director, or some other special business also being done. So once you complete it, and the minutes of the everything has to be filed, even including the annual return also, when within 60 days from the 60 days from the date of AGM. You remember that section 92 we discussed 60 days. Now again comes as EGM. Sir, what is EGM? Extraordinary general meeting. Any meeting which is there, the company want to do it, but want to discuss some matters, but those matters can't wait for a longer period of time. Only under the emergency matters the company try to call for the EGM. Any meeting of the members which is called between 2 AGMs is called as EGM. One AGM is going to happen in August of 2025. One more AGM is going to happen in August of 2026. Because financial year ends within 6 months, they have to do it. 6 months is September, they are doing in August. But in the month of April, some emergency has come. Some fire broke out in a company. Some director died. Some CEO died. Then what about the future of the company? To discuss some emergency matters, company calls an EGM. So any meeting called between 2 AGMs is called as an EGM. So when you try to call any meeting, you have to follow that notice requirement, everything is there. So every company except OPC shall hold an AGM every year, because OPC you can't talk to yourself, na? One person company. AGM and EGM, both the things are there here. First AGM rules must be held within 9 months from the end closing of financial year. No need to hold an AGM in the year of incorporation. See, what do you mean by in the year of incorporation? If you incorporate, consider 1/1/25. In 25, 31/12/25. This year no need to hold the AGM. The moment they use the word in the year, it is not financial year, it is calendar year. We will discuss in General Clauses Act. Where the word financial year is there, they specifically use the word financial year. If they don't use the word FY, it is always the calendar year. They're trying to tell that if you are incorporated on Jan 1st, anyway your year ends on 31st March of 26. So then hold that AGM on the August or September or December of that year. No sir, I incorporated on November 10th, 24. Okay, that means 24 ends on 31st December 24. Don't do meeting this. Anyway, 31st March completes, then within the September of next 25, you can do that AGM. And subsequent AGM rules within 6 months from the closing of financial year. But the gap between 2 AGMs must not exceed 15 months. This is an MCQ point. Then if you want an extension, you can apply for an extension up to 3 months. And once extension, no extension granted for the first AGM anyway, because they have extra time only, in the initial time only. But if you see, you are supposed to conduct by 30th November of 25. You have an option to take extension of 3 months. Consider you first applied for 1 month extension, that is 31st October and 25 you want to conduct. You could not conduct between that time. Can you anyway thinking that I have still 2 more months, can I apply for 1 more extension? Not possible. You can take up to 3 months extension. That extension has to be applied only once, not multiple times. And time and place for the holding the AGM. Any AGM shall be held between 9 AM to 6 PM, that is working hours, on any day other than national holiday. There are only 3 national holidays: October 2, August 15 and Jan 26. Except those 3 you can do even on Sunday also, public holiday also it is available. It is held either at the registered office of the company or at any other place within the city, town, village where the registered office is situated. You know, Christ College, Christ College, Infosys company. Where is the what is this registered office? Bangalore only, outskirts somewhere. They can do in the that company, or they generally 90% of the time earlier they used to take the Christ College auditorium. In the same city, village, they'll try to do it. And some unlisted company, AGM can be held at any place in India if all the members give a prior consent in electronic consent. That means I ask unlisted company means consider I have 300 members. All the 300 members told, okay, we will not hold here, we will hold it in some other place, maybe in Mumbai or some other. If you get every unanimous consent in writing, you can hold it. But if you are a private company, private company, no, not the private company, okay, that's okay, that's it. Section 8 company, time, date and place of AGM are decided by the board considering the direction given by the company in general meeting. Exception applies only if the company is compliant with the filing requirement, that is 137 and 92. Government company also they should hold similar way except on national holiday and 9 a.m. to 6 p.m. either at the registered office or places approved by central government. And what is the power to call the tribunal to call the AGM? Consider within 6 months company has to call the AGM. Members are waiting for AGM. Company did not call the AGM only. They thought okay 3 months extension could have been taken. That they waited 3 more months. They did not call. Then members went to the tribunal. Your Honor, the company is not calling the general meeting. Then company has the reasons to the tribunal has the reasons to believe the tribunal will order the company to call the AGM. They again did not call. Then tribunal only calls the AGM of the company. So if a company fails to hold an AGM under 96, the tribunal may, on application of any member, call or direct the holding the AGM and give necessary directions to the company. Such direction may include that one member shall be deemed to constitute the meeting. An AGM held under the tribunal's direction shall be deemed to be AGM of the company subjected to any directions of the tribunal. That means you don't need to do one more AGM again after within the 30th September. Anyway, that is considered as AGM. Then there are some powers of tribunal to call the meetings. Which meetings? Generally, general meeting we discussed that AGM. Other than general meeting, we are discussing now annual general meeting. So power of tribunal to call other than the AGM. What meeting else is there then? EGM. It is impracticable to call the meeting other than AGM in the usual manner. The tribunal can either suo moto. Suo moto means voluntarily or by itself, or on the application of any director member entitled to vote other meeting called, held and conducted as the tribunal deems fit. Tribunal will give the necessary directions including the modifying the calling, holding and conducting the meeting. Such direction may include that one member present deemed to constitute the meeting. That means either in person or by proxy. That is also sufficient. Only one member is sufficient for the meeting which is called by tribunal. Anyway, that has to conduct it. That can't adjourn. Then comes EGM, section 100. So board has a power to call the EGM whenever it deems fit. Members will call it. Board has a power to call that. In EGM shall be held at the place within India only, except for the wholly owned subsidiary of a company incorporated outside India. If you are a foreign subsidiary, then you can hold in foreign country only, except that. Then, can you call the EGM on the requisitionist of the members? Yes, who can make the requisition? You remember that 1/10 of the paid up share capital, voting rights. Here also 1/10 of the voting share capital, voting power, where the company does not have share capital with share capital. The requisition must be state that matters considered, signed by requisitionist and sent to the registered office. The board shall call the meeting within 21 days of the receipt of valid requisition and hold within 45 days. That means give notice within 21 days, stating that within 45 days meeting will be completed. Then, if it is called by requisitionist, all the reasonable expenses incurred by requisitionist in the calling meeting will be reimbursed by the company. Because EGM has to be called by company. Company is not doing that. Members are doing. You give the money to members only. Then again, you remember that 111 section, the similar way it is there here. I am not reading that again. You can go through that. Report of AGM. These are MCQ points entirely. Every public company shall prepare a report on each AGM, confirming the meeting was convened, held and conducted as per the Act and rules. Copy of the report shall be filed with registrar within 30 days of conclusion of AGM. The report is to be prepared in addition to the minutes of the meeting. Minutes anyway that has to be filed. Here, this report has to be filed within 30 days of AGM. And report should include what? That should be signed by chairman. If chairman is not the true director, including one MD, date, day, hour, venue of the AGM, confirmation of chairman's appointment, number of meetings attended, everything, quorum, compliance with the Act and rules, business transactions, etc. Then there is some penalty. 122 is not important because it is an OPC. All the sections of this chapter 7, that is 88 to 121, are not applicable entirely. Because AGM can't be called, EGM can't be called because there is only one person. No need to give the notice also. Again, no need to, what is this, appoint the chairman also. All the sections which where more than one persons are required, all those provisions are not applicable for one person company. That's it. We'll come back and discuss those two sections, that is 88 and 89. What is the page number? Page number is 42. First of all, here there are two concepts. Declaration of beneficial interest. Sir, what is beneficial interest? If the registered holder is a different person and the benefits are being received by some other person, the person who is registered owner should file a declaration to the company stating that, see, I am the registered owner, but I am not getting any benefits. He is the person who is getting the benefit, he has to give it. The person whose name is there, that person also has to give a declaration to the company stating that I am not the registered owner, still I am getting the benefit, you make note of it. Both the declarations, the company has to take it and file with ROC. That is what it is there, giving the declaration part. So, a person whose name is entered in the register, that means a registered owner, registered holder. As the registered owner only will keep it the word, shall file a declaration in form MGT4 within 30 days. When the moment he transferred his interest, beneficial interest to some other party, from the date of transfer within 30 days, he file with the company. A person holding beneficial interest, that means he is a beneficial owner, shall file MGT5 within 30 days after acquiring the interest. Again, a declaration shall also be filed within 30 days if there is any change in the beneficial interest of any share. Earlier 1000 share was there, now only 800 shares are there. There is a change that also has to be filed within 30 days. Then the company shall file the MGT6 within 30 days of receipt of such declaration. Member also filed, beneficial owner also filed within their time. The moment I receive both the declarations within 30 days, I should file with the ROC. One is for registered holder, one is for beneficial owner, third one is for return to the ROC. Then comes the designated person. Who is designated person? One second. Every company shall appoint a designated person for providing information to ROC or any authorized officer regarding the beneficial interest in the shares, and the company may designate it. That means I, as a member, give it to the company, beneficial owner also give it to the company. Now, which party is responsible to communicate to ROC? Company has to appoint some party. That appointed party is called as a designated person. Who can be the designated person? It can be a CS also. It can be a KMP also other than CS. Or every director, if there is no CS or KMP, is responsible to communicate to the ROC. If no one is formally designated, the following shall be deemed to be responsible. In simple terms, every KMP, full KMP is responsible. You see, KMP consists of MD, manager, company secretary, director. Whole time director is not there here, but every Manager is responsible. Reporting of AGM, every company shall include details of DP in the annual return. Who is that designated person? There. Change of designated person. Again, you should appoint one more designated person and inform ROC. If you don't file within 30 days, again there are some punishments. Exemption of 89. Okay. Duty to pay duty of company to pay dividend. So just because the registered owner is different, beneficial owner is different, you can't tell that I'll pay dividend only to the registered owner, because we gave the right to transfer the benefits to the other party. Then you can't, as a company, tell that no, you are not the registered owner, you will not get the dividend. The dividend provisions are not affected because of this concept. This is not an exclusive, mutual exclusive concept. What is beneficial interest? Interest refers to a person's right or entitlement, either directly or indirectly, through a contract, arrangement, or otherwise, to exercise rights attached to the shares, either alone or with his others, receive dividends, or participate in any distribution related to the shares. That means if he is getting any benefit, then he is called as beneficial owner. If there is any default, then penalty is there. Then comes the significant beneficial owner. So just now whatever we discussed, that is beneficial owner. Even I get 1 rupee dividend also, I am beneficial owner. What is significant? Big portion is called as significant. Sir, how much is significant? Generally 10% they consider it as significant. So SBO, every SBO shall disclose the nature of their interest to the company within the prescribed time, as to the company shall report it to the ROC. Any individual who alone or with others, so one or more persons or trusts, holds at least 25% of the beneficial interest in the company's share, or any other prescribed percentage, or the right to exercise the actual significant influence over or control over the company. Sir, you told 10%, wait, here it is given. Now later other percentage as they prescribed, they told na SBO now defined as someone who holds directly, indirectly, together with other direct holdings not less than 10% of share or voting rights in the company. This is now which is applicable, not 25%. Or he has a right to receive or participate in not less than 10% of the total distributable dividends. Or he has significant influence over the control, either directly or indirectly. When this is significant influence, more than 20%, more than or equal to significant influence. You remember associate company definition we discussed? So 10% of either votes or 10% of dividends are significant influence. These three persons who are having anything is called as SBO, significant beneficial owner. You remember this revised SBO definition. What is majority? Again, we know it. Significant influence, we know it, that is participation part. Power to participate directly, indirectly part. Majority stake means more than half of the shares, that is more than 50%. Direct versus indirect holding, I told. Direct means I am directly holding, indirectly means through one or more subsidiaries I am holding. So it is the responsibility of the company for identifying the SBO. If anybody is holding more than 10%, that person is not coming forward and telling that yes, I am holding. It is the responsibility of the company to identify who is holding 10% or more, and ensure that they file a declaration as per section 90. And the notice shall be sent to any person supposed to being an SBO or having knowledge of one. If you are SBO, I'll give a notice, you file the declaration. If you know anybody, I'll give a notice to you, please intimate them and make them file. And they also maintain separate register for SBO. And if anybody member want to inspect it, for inspection only, fee not exceeding 50 rupees per inspection. See, look at the thing, in register of members, register of debenture holders, register of any other case, inspection is free. Any copy you want to take 10 rupees per page. Here inspection of SBO only 50 rupees per inspection, not exceeding 50 rupees per inspection. So if there are already existing SBO, within amendment, when the amendment rules came now, within 90 days you should give the declaration. New SBO means within 30 days of becoming SBO you should give. The moment you hold 10%, you have to file it. And individual becomes SBO as the ownership changes within 90 days of commencement of company, then it will be considered as effective on 90th day. So the 30 days period for filing declaration will be counted from that 91st day. Non-applicability of SBO. That means even though, see, this fund is their IPF fund, what happens? Whenever persons are not claiming any dividend for 7 years, kept is an unpaid account, unpaid dividend account, or preference shares, or debentures, or deposits, or anything, the company has to transfer it to IPF account, Schedule 7 account. That means along with the dividend and shares also they have to transfer. If the IEPF only had 10% or more shares because of the transfer, that is not called as SBO because they are not there for the purpose of doing an investment. They kept as a beneficiary or as a custodian until unless the true owner comes. That is why these are the people who are exempted from SBO disclosures. Holding company, because more than 50% only holding will come. You can't call him as SBO. Anyway, they are controlling it. Central government or state government, body corporate or entities, investment vehicle registered under SEBI, that is EIF, InvITs or RITs, real estate investment trust, infrastructure investment trust or alternate investment fund, or RBI, IRDA, PF, RDA, etc. Remaining is penalty part. Just one thing which I ought to tell you is compoundable offense. What is compoundable offense? If you look at the thing, they're trying to tell that penalty of 50,000 and 1,000 rupees per day during continuous failure or up to maximum 2 lakh. So compoundable offense means if there is any fine and imprisonment, both are there. In that case, you can escape one thing by doing one more thing. You can pay penalty or fine and escape the jail, or you can go to the jail, escape the penalty. Non-compoundable means you can't escape. Both has to be there. If they tell that 2 lakh rupees or 2 years of imprisonment or both, then if they tell that you choose one thing, then you can compound it. Even if they give imprisonment, you can compound it. That means replace that with the penalty and get it compounded. That's it. Yes, designated partner is only for LLP. Here, partner will not be there in case of company. Some members will be there, or some we can call it as persons. If the company specifies any person, that is called as designated person. Any person who is appointed to do this declaration to the ROC is called as designated. ನಿನಗೊಂದು ಯಾವ್ದು ಸ್ಪೆಸಿಫಿಕ್ ಕೆಲಸ ಕೊಟ್ಟಾಗ ನೀನು ಡೆಸಿಗ್ನೇಟ್ ಮಾಡಿದೇನೆ ಅಂತ ಹೇಳ್ತೀನಿ. You are designated to take care of sales, purchase, investment, anything. That is what you are designated. Designated means appointed. Yeah, anything can be done. I will look into it once. I'll give 5 minutes. Look into entire chapter. Just go through entire chapter. We will do some questions. Then we'll wind up. Online people will hold. So A&S Limited has a paid up capital of 200.56 crores. Received a member requisition for EGM on 1/7/24. So director did not respond for till 27/24. 24/7/24. Then requisition called themselves the meeting. Notice was signed by one of the requisitionists, authorized by others, sent by email without the explanatory statement. Advised, who are requisitionist entitled to call EGM themselves. Second, is notice by one requisitionist valid? Is attaching the explanatory statement mandatory? Three questions are there. First of all, it is testing on 102. That is explanatory statement. Explanatory statement is mandatory for which companies? Listed company it is mandatory. Unlisted company means there are two conditions. Paid up capital and turnover condition. What is this? Check it. So it is there. Explanatory statement of a meeting. This is 102. Which page? No, I'm not going the answer. 57, 48, 40. We will see question bank. Wait. EGM requisitionist. So first one is, can they call the EGM by themselves? Is it can they call or not? Tell me. Second one is, notice by one of the requisitionist valid or not? Actually, the giving the notice is what? 1%. 1% అయితే 1/10 అయితే ಇಲ್ಲಿ 1/10 and attaching the explanatory statement. This is 7.1. We will see the answer. Three questions. 5 marks question. Requisitions rights under section 100 bracket 4, if the board does not call the EGM within 21 days of receiving the requisitionist, that is 24 days they did not call, requisitionist may call the meetings themselves within 3 months of the deposit of requisition. Directors failed to respond from 1/7. Here it happened, so 23 days, more than 21 days, requisition were entitled to call the meeting. Okay. Notice by one of the requisitionist. 100 point bracket 4 permits notice to be signed by one or more requisitionist if the duly authorized by others. This is also valid. Explanatory statement is mandatory for every item of special business. Special business means other than adda points at AGM, anything. Not attaching it makes the notice defective for special business. If EGM involves special business, then the notice is defective without explanatory statement. See, they're using the word if the EGM involves special business, because they did not tell whether the special business is there or not. It is one very good question. Mark it as important. Within 21 days, if they don't get any reply from the company or the board of directors, they can call the meeting. Before calling the meeting, they should get the authorization by all the members, and if it is special business, definitely they have to give a this explanatory statement for that thing. Again, Fabulous Fabricators and Mechanics Limited is a listed public company, incorporated in 23 with paid up capital of 200.30 crores and 865 members. That means I think quorum might also be there. 865 members means 5 members are the quorum required, up to 1000. The board provided e-voting despite Mr. Riddhi opposing it is not mandatory. Okay. For company who is having more than 1000 members or listed company has to compulsorily give the e-voting facility, but less than 1000 members also optionally they can give. It is not mandatory to give. That's it. Mr. Mohan, member who has opted for e-voting, could not exercise it on the day of AGM and physically present and was physically present. That means if you are given an option to vote, if you did not vote and come the meeting, then you can vote it here also. The chairman refused to allow him to vote physically. Is it valid? No, it is not valid. It has to be allowed. So decide e-voting mandatory for this company, not mandatory. But the company may provide an e-voting facility that is there. If Mr. Mohan opted for e-voting but could not exercise it, can he physically vote? Yes, it is. He can vote. Hence, he is not voting. Simple question. That is 7, right? Here, e-voting mandatory. Oh, is it listed company? Yes, it is a listed public company. That means it is mandatory. We did not read the question. Just we read the 865 members. If you do this again, gone. E-voting is mandatory for all the listed companies. So e-voting is mandatory. Riddhi is incorrect. Physical voting, yes. Chairman's refusal was incorrect. He has to allow him to vote. If you sleep now, it happens. At least you should read the question correctly. EGM. Okay. ಹೌದು. ನಾನು ಬೇರೆ ಹೇಳ್ದೆ ಈಗ. Sent by email. The explanatory statement is not because of EGM. Explanatory statement is because of the special business. Special business is compulsory explanatory statement ಕೊಡಬೇಕು. Then before looking into September 24 question, we will see Jan 26 question. In the adjourned AGM of Sunset Private Limited, only one shareholder was present and the resolutions regarding the approval of the accounts and reappointment of director were passed. Is it good? Is it valid? In the adjourned meeting, if the required quorum is not there, then the members personally present will be considered as quorum. But at least 2 members has to be present. Without that, how can you consider it as a meeting? So, pencil only gana. Examine the validity of these resolutions under 103. It is not correct. At least 2 members has to present. That is 7.6. Where a meeting is adjourned for want of quorum, the members present at the adjourned meeting shall form the quorum. Therefore, resolutions passed at the adjourned meeting by even one shareholder can be valid under section 103 since any number of members at the adjourned meeting constitutes quorum. Oh, there is an MCQ maybe, but wait, let me see the concept. Quorum, right? Section number 101. Here only there. Adjourned meeting due to want of quorum. Okay. Here they just use the word if quorum is still not present in the adjourned meeting, members personally present shall form a quorum. Look at our regular material or ICA material once. Here only it is there. Here. If the quorum is not present at the adjourned meeting, the members present not less than 2 number will constitute the quorum. What is the ICA answer in that? Okay, ICA material answer I am asking. Kotila. Which page number? 40. Where the quorum is not present in the adjourned meeting, this part we are seeing. Within half an hour, then the members present shall form the quorum. OPC authorized OPC na? Allah. Members present in person. That is different. How to constitute a meeting at the meeting? At least two individuals shall present in person. Thus, in case of public company having not more than 1/3, 1,000 members with a quorum requirement of 5 members, an authorized representative of 5 body corporates can't form a quorum himself, but can also do if at least one member is personally present. No, this is different category. See, if where in case of more than 1,000 members are there, 5 members are personally required for the purpose of this thing. If for the meeting only 5 body corporate comes na, that doesn't form a quorum. For that, at least one per members who are holding the shares should personally present. Then 5 body corporate is acceptable. That is what they're talking there. Okay, then I'll change my material also. Quorum not present at the adjourned meeting also, where quorum is not present in the adjourned meeting also within half an hour. Then the members present shall form the quorum, because of which it is valid now. Then it is still valid. I'm not convinced regarding this answer yet. It is true. ICI prakara. I am still not convinced conceptually. I'll go and search some other material also. Actually, if you think with common sense also, it should not be there. For meeting, at least 2 members should be there. Members personally present. That's okay. We can't do anything. RTP May 26 paper, you see here. Discuss the following in the light of provisions of Companies Act 2013. Mr. Prem and his wife, Mr. Sarchana, jointly hold shares of ABC Limited in the dematerialized form account. In such circumstances, which joint holder is entitled to exercise the voting rights through the e-voting facility? First question. Based on the seniority, the persons whose name is entered on the top, he will be entitled to exercise the rights. The annual general meeting of the company is scheduled to be convened on 10th September 2025. Yes, within 6 months from the date of financial year, you can convey the meeting. That is 30th September. Determine the duration of the remote e-voting period and simplify the time at such e-voting shall conclude. That means at least how many days? 3 days, 7 days. No, just because I confuse you, it does not mean that you should get confused. It should be open at least for 3 days and it should end on 5 o'clock before the date of meeting, 5 p.m. That you should write. Third question. We'll see. 7.7. Giant told 7.7. In case of joint shareholders, the first named holder, that means seniority, who is in the register, the member entitled to vote, where such shares are in demat account, first named holder, name. If his name appears first, then entitled to exercise the voting rights through voting. Mr. Sarchana as a second holder can't independently exercise voting rights. Duration of voting shall commence 3 days before the date of meeting. Shall end on 1 day before the date of meeting. E-voting shall close at 5 p.m. on the day before the meeting. And here for AGM on 10 September 25, 9th September 25, 5 p.m. they should end that e-voting facility. If you at least listen to the class also, you can manage many questions here. RTP May 26, one more question is there. Prime Industries Limited, a public limited company with 800 members. See, public listed aita illa, only public company. with 800 members. That means 5 is the quorum requirement. Convenes its general meeting at 11 a.m. on 15th March 27. Present Rahul Sharma, Priya Patel, Vikram Singh. 3 individual members in person. Arjun Mehta, authorized representative of Horizon Private Limited, arrives at 11:15. That means within half an hour. Yes, valid considered. Neha Kapoor, authorized representative of Sumit. Karan Desai, Maya Reddy, 2 members by proxy only. For that, it is 5 members, it is not counted. Discuss whether the quorum is met at the start of during the meeting. First of all, when did they come? No, this is 11:15. This is over. Neha Kapoor, these people, Karan Desai and Maya Reddy, 2 members by proxy only. Okay. Even then also 3 plus 1, 4 is there. Whether the meeting will be deemed validly conducted if Arjun Mehta arrived at 11:15? Yes. Within first half an hour of the meeting, they have to come. They tell that not more than 1000, 800 is less than 1000. Na? So 5 members personally present should be there at the meeting. So it is somewhere 5 members is personally present at the meeting. Now, but count is only 4 members. That is 3 individuals plus 1 representative who came at 11:15. 4 members. Karan Desai, Maya Reddy, proxies only. Proxies do not count for the quorum. They just come and sit in the meeting. So not yet arrived. Quorum is not met at 11 a.m. Only 4 members are present. 11 a.m. means 11:30 a.m. actually. The quorum is not met at the start of the meeting. That is 11 a.m. When Arjun Mehta arrives at 11:15 a.m., total 3 individuals plus individual Neha Arjun. Okay, 3 individuals plus Neha Arjun, 5 members. Quorum is 5 members met at 11:15 a.m. Where 2 members came, 11:15. ಆಗುತ್ತಲ್ಲ ಡೆಫಿನೆಟ್ಲಿ ಆಗುತ್ತೆ. ಎಲ್ಲಿದೆ ಹೇಳ? ರಾಹುಲ್, ಪ್ರಿಯಾ ಪಟೇಲ್, ವಿಕ್ರಮ್ ಸಿಂಗ್, present members are Rahul Sharma, Priya Patel, Vikram Singh, 3 individuals. Then Arjun Mehta, representative, arrives at 11:15. Neha Kapoor, authorized representative of Sumit Limited. Okay, they're considering here also 2 representatives have come by 11:15 only. So at 11 a.m. less than 5 is there, less than or equal to 5, no quorum. At 11:15, quorum was there because of 2 representatives of what is this, body corporate, and 3 individuals are there. So at 11:15, quorum was met. Provided this 11:15 section 3 provides that if quorum is not present within half an hour of the meeting time appointed for the meeting, then meeting shall stand adjourned. Since quorum was not met at 11 a.m., the meeting should normally be adjourned. However, if the chairman waits and Arjun arrives within 30 minutes by 11:30, okay, look at the language I used. They told Neha Kapoor, Arjun, where is Arjun here? Arjun Mehta. Arrives at 11:15 only. Why the answer they are twisting like this? The quorum is met at 11:15 a.m. The meeting can be validly conducted once the quorum is met. The meeting is deemed to validly conducted at 11:15 a.m. within 30 minutes. Okay, you write the quorum part as per section 103. Where a public company is having a less than 1000 members, the quorum requirement is 5 members personally present. For the purpose of quorum, proxies are not considered. So in the given case, 3 members personally present at 11 a.m. At 11 a.m. quorum is not met. 3 members are personally present. You write the facts. Later 11:15, two more representatives have come. Then later proxies has come. Conclusion: at 11 a.m. proxies is not met, but the chairman has to wait for half an hour as per the provisions of Companies Act. At 11:15 the quorum has been met, so that the quorum has been meeting has been validly conducted because of the presence of quorum. This is what we have to write the answer for it. Here, look at the meeting. Samyak Limited is a company engaged in the business of manufacturing papers. Kindly explain the provisions related to quorum of meeting. as per the provisions of 103. That's it. See, limited means it is what company? Public company. Private limited means private company. Now we explain that 103 up to 1000 members, 5000 to 5000, 15, again more than 5000, 30 members. That's it. You explain that entire provision. Huh? ಹೌದಲ್ಲ? Quorum for adjourned meeting here also one is there, MTP 5. Same meeting, same thing only, but twisted. 11th March at 11 a.m. was the company meeting. The company also has 900 members. What company it is? Limited means public company. 900 members means 5 members are required. 11 March, following persons were present by 11:30. Okay. P1, P2, P3 shareholders. P4 representing ABC. Okay. P5 representing DF. Okay. Still considered as 1, 2, 3, 4, 5 only. By 11:30 they are there. P6, P7 proxies. We are not counting for what is this quorum. Examine with reference to the relevant provisions of Companies Act 2013 whether quorum was present in the meeting. Yes, within first half an hour they are present. What will be your answer if P4 representing ABC reached in the meeting after 11:30? Then no quorum is present. Adjourn to the next week. Next thing. In case of lack of quorum, discuss the provisions applicable for adjournment. That means in second answer, don't write it as next week, next time, everything. You tell that the meeting is adjourned in the second point. In the third point, they specifically asking what is the provisions applicable for adjourned meeting in terms of date, time, and place. You should write here. And fourth one is what happens if there is no quorum in the adjourned meeting. Then members personally present will be treated as quorum. Yes, 11:30 is okay. 11:31 is not okay. Quorum for adjournment, again MTP question only. 1200 members are there, then 15 members has to be there. But meeting was conducted on something which 14 members were personally present. Mohan was acting as an authorized representative of two body corporates for members. That means QL Limited, Mr. Mohan was counted as a single person in this 14 members present. That means when they counted 14, Mohan has counted as 1. If he counted as 2, 15 will be there. Sham, one of the important members, was absent. The chairman, Mr. Rahi, adjourned the meeting, taking plea of absence of Mr. Sham to the same day, place next week. Whether the requisite quorum hold meeting required in case of public limited companies present in India, whether Mr. Rahi could adjourn the meeting in case of current scenario. First of all, authorized representative, can he act as not? See, proxy can be acting for 50 members. Proxy is allowed under 10.5. Respect to this, what was the question number that we discussed now? 15. So he is authorized representative of two body corporates shall be treated as 2 members. Hence 14 plus 1 extra, 15 is present. Since the requisite quorum is present, he could not adjourn the meeting. It is not valid reason. Yes. Okay. One extra point which we understood now is when you are representing multiple body corporates, you are considered as multiple members present in the meeting. Here it is not proxy. He is a representative. Section 113 representative, 112 and 113. Proxy is individual members appoint ಮಾಡಿದ proxy ಅಂತ ಹೇಳ್ತೀವಿ. If the body corporate appoints somebody, then we call it as representatives of them. We don't know that. Is not as per the syllabus. I think there is no limit for that. Again, quorum only I am not discussing. AGM date venue of unlisted company. Where they can do at any place in the same city, same village, or they can do in any place in India also, provided they have written consent in all the shareholders. You remember that we discussed one provision there. That is there. AGM on national holiday and venue restrictions. National holiday not possible. Venue we can't go outside India. That is within cities also allowed. Time limit for filing annual returns. What is the time limit? 60 days from the date of AGM. Then abridged form and signing of annual returns. Abridged form of annual returns is applicable for OPC and small company. That is 7A, MGT 7A. And annual return is section 92. Explain the following as per the thing. Abridged form of annual return, that is this annual return is 92A section, I think. Signing of annual returns, it has to be signed by 2 directors, in which one should be MD or 1 director and 1 company secretary. You go through that. Persons entitled to receive the notice of general meeting, every person, members, preference shareholders, debenture holders, directors, auditors, every person is entitled. See, such simple questions you don't expect in the examination. Hmm? Other the students will fall for the trap, study those things and come. Okay, here I think only one subsidiary which is a foreign, then you can hold conduct in foreign. What is the first AGM time limit? 9 months. 9 months. Does the register have the power to extend for 3 more months? No, that is only for subsequent AGM. 6 plus 3 is there, not for 9. Proxy time limit and validity. Within 48 hours, before 48 hours of the meeting, you should deposit, and if anybody want to inspect, before 24 hours of the meeting, you can inspect it. CSR anyway we discuss in the other chapter. Again CSR chapter 9, 9. Service of documents, okay. Mode of voting by joint shareholders, it is not allowed. Unless until it is, what is this? Senior member who is recorded in the register. That's it. You can do the remaining questions later. So I think we should stop here. There already so much of overheads are happening. So if you have anything to ask, you can ask. So tomorrow we will finish off the small things. Maybe chapter 5, 6, 8, 9 we will see also what happens. Then in the next day we'll finish off everything. ಹೌದು ಫೋರಮ್ದ ಏನಂತ we'll take it that only. Whether it is 1 or 2 doesn't matter. If somebody is present, then it is valid. Yes. That's it, guys. You can see you tomorrow at 8 o'clock. Till then, take care. Bye bye. Question bank.